So Anuj, who's covering the budget takeaways?
Mr. Ajit Ranade.
Oh, Ajit, okay. That's great. So we have about 5 minutes or 4 minutes to go. And I think Mohit, has he joined?
No, he's joining in about, say, 2 minutes. And also, I'm getting a call from Mr. Dr. Randy. So I'll just check on that, please.
Okay.
Sure. Thanks, As. Let's see if you got the mail now.
So he's also joining in about 5 minutes.
Okay, great. How are you doing, Asim?
I'm doing good. Thank you.
Anuj, are you seeing people also buying these second, like these little holiday small places?
Big time. Big time.
Yeah.
I
Yeah.
mean, particularly on the outskirts of Bombay, Gurgaon,
Correct.
Bangalore. Bombay, Alibag is absolutely on fire. I mean, anything that comes out in Alibag is getting lapped up.
Yeah. I think people have also
Amazing.
learned that that is essential.
Yeah, and I don't know, ma'am, whether it is temporary, once the pandemic goes away, maybe a year later, it cools down. But today, I mean, it is like crazy. Maybe because of the RoRo as well. The
Absolutely.
RoRo has
That has made
started,
a difference. Yeah.
it's made a difference in there. And, people are, instead of work from home, it is like, work from anywhere.
Correct. Yeah.
And
I
very
think
tough to.
organizations have accepted it. They are not fussing about which place you're operating from. Yeah.
Productivity has been pretty decent.
Yes.
I mean, like what we were speaking earlier, productivity has been pretty decent. I was saying to Asim is that in our organization as well, we're finding, people are going to be here sort of 3 days a week. But productivity has been pretty decent.
I'm not seeing much of it. In fact, I find this a much nicer way to operate. Of course, I miss meeting people and having coffee with everyone. But other than that, I think this has been just as productive.
The travel time has reduced considerably. So, I mean, if a person is traveling from Andheri to Worli, it takes about 1.5 hours, 2 hours during peak time. So that has also, gone down considerably. Yeah.
Correct. Should we start, Asim? For 2:30?
Yeah, just a couple of minutes. We'll let Mohit join. Also, Dr. Ranade is joining. So just 2 minutes and both of them join and we start.
Done.
Dr. Ranade has joined.
Hello.
Hi,
Hi.
Dr. Ranade. This is Anuj. I've also got Kashmira ma'am with me. Asim from CII, whom you know well.
Yes, of course, of course. Hi, everybody.
Hi, Keith.
Hi, Kashmira.
How are you?
Sure, I am good. I'm good.
I can't see you. Where are you?
Oops, wait a minute. My video. Okay. Angle.
Okay.
Yeah, we can see you bright and clear. We're very excited to hear your views on the budget, what's happening with the Indian economy. We have
Hey,
no
Baba,
idea
you haven't got bored with the budget speeches yet.
Well, certainly, the stock market has given such a great thumbs up. And,
Yeah.
I'm wondering what is there in the budget that it has got such a great thumbs up.
Is
The
it still
stock
doing
market
still
given
going
a
strong
thumbs up
today?
to everything, even pre-budget.
Uh-huh.
Yeah.
Sorry?
Is it still doing well today? The stock market?
I haven't seen today.
I haven't seen it either.
So this is the annual CII summit, Listed Summit, right?
That's right. Yes. Once a year we do it. Last year we had done it in February in physical form.
Yes, yes.
So this time February is virtual.
And we, is it usually led by the West Zone CII, or how does it work?
So each zone does it. I think the West Zone is the most active, given Asim's contribution and the push that he does it. So West Zone, we've been consistent. This is our, I think, 13th or 14th edition, and every year we've done it. I think some of the other zones do it and then forget it, and then wake up and then do it and then forget it.
Okay, okay, great.
Asim is very partial to this sector, I know.
I'm just going to call up Mohit to check and then we'll begin.
Yeah.
Should we start anyway?
But Anuj, so you are not, I mean, generally, have you been as upbeat as the stock market?
After a very, very, very long time, I have been upbeat. After a very long time, I've been upbeat. After, I would say, about 9 years, I have been upbeat on the residential real estate. I think on the office, it's going to take a little bit time. People think it'll recover very quickly. I don't think it is going to recover that quickly. I think this is going to take some time, at least till 2023 calendar year. We're not going to go back to 2019 leasing activity. So I think we're in it for 3-4 years.
Mm-hmm.
But residential has really surprised me. I had not expected this kind of a bounce back on the market.
Oh, good to know.
And it's also quite an integral part of the economy. So, if real estate starts to do well, there are a lot of industries that are dependent on it. There's a huge amount of employment. It does then show that the confidence is getting back in the overall economy.
Yep. So what I propose, of course, we're going to start during my session. Is there time to take questions, or should we just keep it as?
So I had a few questions that I will ask you, 3 or 4. I don't know, Asim, whether we'll be able to open the floor.
You can ask your questions, and we'll see if there are any audience questions. We'll take them as well.
No. I mean, if Anuj and I talk, that's it's just more productive and
absolutely
more interesting rather than just.
Absolutely. So maybe about 5-7 minutes if you can do your opening remarks, and then I have some leading questions.
Okay.
And then we can have a sort of discussion around those.
Yeah. I think we'll begin. We'll begin. Yeah. So a very good afternoon and a very warm welcome to all of you, ladies and gentlemen, on behalf of CII, the Confederation of Indian Industry, and Anarok Property Consultants Private Limited, our knowledge partners. I welcome you all to the 3rd edition of CII Real Estate Confluence 2021, this time with the theme of Vision 2025 for Indian Real Estate. To begin with, may I request Ms. Kashmira Mewawala, the Chairman for CII Western Region Subcommittee on International Trade and Investments and the Head Business Development and Chief Ethics Counselor for Tata Capital Limited, to please deliver the welcome remarks.
Thank you, Asim. And it's great to be here and connected like this. Mr. Anuj Puri, Chairman of the 3rd edition of the CII Real Estate Confluence 2021 and Chairman Anarok Group. Dr. Ajit Ranade, President and Chief Economist of the Aditya Birla Group. Mr. Mohit Malhotra, Managing Director and CEO, Godrej Properties. Of course, Asim Charania, Head Maharashtra CII. A very warm welcome to everyone to this 3rd CII Real Estate Confluence 2021. At the start, I thank Mr. Anuj Puri, Chairman of this Confluence, and Chairman Anarok Group and his team, as also Asim and the CII Secretariat, for conceptualizing and organizing this conference at such a very apt time. The theme for the year is Vision 2025 for the Indian real estate. The sessions have national industry experts and government officials to discuss on the resurrection of the Indian real estate post-COVID, and of course also post the current union budget, the opportunities, the new trends and insights, which will all help chart the way ahead. The real estate sector, as we all know, is one of the most globally recognized sectors, and the construction industry is ranked amongst the third major sectors in terms of direct, indirect, and influence effects on all sectors of the economy. The growth of this sector is usually complemented by the growth in the corporate environment and the demand for office space, as well as urban and semi-urban living spaces. But the pandemic has created a big disruption in the real estate segment, with supply and demand patterns changing and changing pretty drastically. Even after the unlock from June onwards, the situation remained pretty grim through September as construction activities were stalled because of labor paucity and sales were down on account of concerns over general economic growth. The threat of job losses loomed large, and which also had a dampening effect on the consumer sentiment. Site visits were not possible, and real estate developers and property brokers quickly adopted to digital technologies to launch new projects and market properties, which actually gave them a fair amount of success. As a positive, the pandemic has really accelerated the pace of digital adoption in real estate, which will go a long way in transforming how properties are sold and marketed in our country going forward. The unprecedented period has brought the importance of home ownership to the forefront. The need for larger homes also led to better sales, and we witnessed some buyers deciding to not just upgrade their homes, but upgrade merely on size. Housing sales began to improve from October due to pent-up demand and the festive euphoria. Also, the softening interest rates on home loans to around the range of 7% and low housing prices, coupled with attractive special offers, were all positive factors that made buyers return to the market, of course, at a rather slow pace. The reduction in stamp duty on registration of properties in the state of Maharashtra was also a game changer. It was a significant catalyst for higher sales in two markets, and we saw this in particularly the Mumbai metropolitan region as well as in Pune during the last 3 to 4 months of the year, which is a huge positive. And this trend is likely to continue as the stamp duty cut is applicable till March 2021. Of course, the union budget laid a lot of focus on certain areas on the real estate segment, and I'm waiting to hear Dr. Ranade talk a lot more on that. With these measures, the real estate segment is expected to hopefully grow at a better pace in the coming months. We now wait to see how the future unfolds. This, ladies and gentlemen, is going to be, as always, a very interesting conclave. I wish you all the very best in the few hours ahead, and you will all have wonderful takeaways from today's conclave. Once again, thank you very much for joining us today. Thank you to all our esteemed panelists and speakers, and I hand you back to Asim, and thank you.
Thank you very much for that wonderful welcome address. May I now request Mr. Anuj Puri, the chairman of the third edition of CII Real Estate Confluence and the chairman of Anara Group, to please set the theme for today's summit.
Thank you very much, Asim, and thank you very much, Ms. Kashmira Mewala. It has been, a delight to hear your opening remarks. After a very long time, we've seen real estate getting into the positive mode. 2020 has been an interesting year. And every year we've had, over the last few years, the CII Confluence. The last that we had was in February 2020, when we had it in physical form. And here we are now doing it in the virtual platform, which I must admit has been very effective over the last few quarters for many of us. And what we're going to witness over this afternoon and tomorrow's second half is going to be very interesting on what's happening with the Indian real estate market. CII with ANROC decided to put together this format, and we said let's not only have the 1-year vision for Indian real estate, let's have a look at what the next 5 years of Indian real estate really holds for us. Day one, which is today, you're going to see and hear a lot of the panelists come and discuss the residential market, which is nearly 84% of the Indian real estate market, retail, hospitality. And tomorrow, which is an equally interesting second half, you're going to have the capital markets, which is the investment side, the co-working, digital technology. And to end the day tomorrow, there's going to be a brilliant session, which is going to be fathers and daughters, fathers and sons, and they're going to talk about how they view real estate from a different lens, that is Gen X and Gen Y. And there's going to be an interesting debate around that. For the inaugural session, we have Dr. Ajit Ranade. As Kashmira ma'am very nicely introduced him, I will do a little bit more formal introduction, and I will also introduce Mr. Mohit Malhotra, who should be joining shortly. Dr. Ranade is the chief economist at Aditya Birla Group. We all have heard him. I am very fascinated with his views. They come up very original, and clearly this is going to be interesting to hear him just post the budget. He has been teaching at several universities, both in India and in the US. He's on the board of a number of companies. What is interesting is that he has served on various committees of the Reserve Bank of India, and is the chairman CII West Zone Subcommittee on Economic Affairs. We're going to hear from Dr. Ranade in a short while. We will also have Mr. Mohit Malhotra, who is the managing director and the CEO of Godrej Properties. He's really the poster boy of Indian real estate. Godrej Properties is India's most trusted brand in real estate. Mohit has been with the firm for over a decade. He's got nearly 15 years of experience and has been instrumental in growing the Godrej Properties portfolio within India. The market cap of this company is in excess of $5 billion. There he is, Mohit, my friend. Thank you very much for joining. It is an interesting day with two heavyweights, one on the economy part and one on the Indian real estate. As I said, is both poster boys, really from where I see. I am going to hold back, Asim, my theme remarks, and I'm going to request Mohit first to deep dive. I know he has paucity of time. For him to deep dive and his understanding of what's happening with the Indian real estate. Suddenly, everything seems to be very bright and very positive, in these times, followed by Dr. Ranade. If I can request you to come in, and then I do want to have a little bit of a Q&A with Dr. Ranade, and then I'm going to come back on the theme address. So Mohit, over to you.
Hi, thank you, Anuj, and good afternoon, everyone. It's a real pleasure to be part of this group. I'll just speak about, Anuj, am I audible?
Yes, absolutely. Brilliant.
Thank you. So I'm just going to talk about, a couple of trends I personally see in the real estate space, which we could see over the next, 3 to 5 to 7 years horizon. So I think three things, which we see as a first is, the trend of consolidation is only going to accelerate. So, if you look at the top 10 developers in India, they have a market share of around 11% on a pan-India basis. We feel that this is a trend which is going to accelerate, and, we will see an emergence of very large developers in India, and also the top developers in India would become pan-India players over this period of 5 to 7 year horizon. So I think that's the first trend which I personally see is going to play out in the industry. If you look at some of the other markets where we saw this happening, and statistics are pretty interesting to look at. China real estate market is more than 50 times Indian real estate market. So you can imagine the scale at which they're operating. And in these markets, today the top 50 players, the top 50 players in China control 45% of China real estate. So I think it's a pretty shocking number for anyone to look at. And the top 10 developers have close to 25% plus market share. I'm sure after COVID, this would have gone up, which kind of shows the potential of consolidation when it starts playing out. Of course, China was ahead of us in consolidation. Their consolidation started in 2008, and our consolidation started in 2017. And the top 10 developers in China in 2010-11 had close to 10% share. So, in the period of 10 years, they have actually gone from 10% to 25%. And we are talking about an economy or an industry which is 50x of our industry. So I think it kind of opens your eyes to the potential. And this is a trend which is going to accelerate. And there are many reasons for it. I can't elaborate because we have a limited time here, but I think access to consumer will play a very large role. Today, in Indian real estate, selling to consumers and under construction property, you need a very strong brand and trust. So I think that's something which is going to play a big role. Again, access to capital. Real estate is a capital intensive business, and after RERA, it has become even more capital intensive business. So, access to debt and equity capital is again very restricted to quality players. So, some of these aspects will lead to consolidation. So I think the first trend, I personally feel, we should not be surprised after 5 years, if the top 10 players have more than doubled their market shares in this period of time. The second trend which I wanted to talk about is, we have been going through a very rough time. It's been almost 8 odd years of down cycle, and we have all forgotten how the good times look like. But I really feel, and Anuj knows that, but I feel that, the worst is behind us. And, we have gone through from one shock to another. And I think people who have survived these kind of shocks are now going to really thrive in the next phase. So again, we should not be shocked if the industry grows 10 to 20 times in the 10-year horizon, because obviously if I say this now, nobody will believe me. But the cycles have a funny way of behaving. When the up cycle starts, it's impossible to catch it. And then I think we are in the cusp of starting a fantastic journey and a very long one. So I'm quite bullish personally, and as an organization, we are very bullish. And again, if you look at these two trends, both through market share gains and through industry itself growing, I see, my first point, that the large developers will become mega developers. And in context of the scale, we are the largest listed real estate company and have less than $1 billion of sales today. And if you look at the top 5-7 players in China, they are close to $100 billion of sales annually. So sky is the limit. We are not China, but there's no reason why we cannot be at least 10x from here on in the next 10 years. And, if I look at Godrej Properties as a company, I was just doing some interesting analysis, and, if you would have asked me this question in 2010, that what would be the company size in 2020, I could not have hazarded the guess, but the actual numbers is that we have grown more than 14x in this 10-year horizon.
Wow.
So now with the economy and the world becoming better and the cycle turning, I don't see a upper cap in my mind on growth for us. And of course, some of the peers who are of similar stature and caliber in the industry. So I think there's a very positive, optimistic, road ahead. Of course, there will be some ups and downs, but overall, on an overall basis, I think the worst is behind us, and really looking forward to this journey. And the third trend, which is already in the play, but I think it will become more important, is that we are becoming a customer-led industry. It's a consumer-driven business from here on. From a supply side business where access to land was the key success factor, today I would say this whole industry has gone to demand side business where consumer is the king. And I think anyone and all of us will have to redesign our organizations to ensure that customer is at the heart of the organization, and all our processes are taking care of customer, both in terms of design and product development, and also in terms of service quality and all of the other factors. So I think these are the top 3 things I wanted to talk about. Anuj, happy to take any questions if you want me to answer.
But no, absolutely, I agree with that, Mohit. What a fantastic positive start that we had. Those 3 points, there is consolidation. We're seeing that as well, Mohit. That there is consolidation happening within the Indian real estate, all the stakeholders, whether those are the lenders, the NBFCs, the intermediaries, the developers, and then good for the industry, it becomes more mature. Second is, would love to see Dr. Ranade talk about it more on the industry and on the economy getting upliftment. And I haven't seen this in 25 years, the way that it has bounced back, Mohit, the real estate. So, clearly there is something that has gone right. Perhaps not for everyone, as you rightly said in the first point, but for select developers like yourselves. The way that it has, come back, and clearly it is a customer-led. I think that you turned around within Godrej Properties many years ago when you put demand in front of the supply, and it was always a very customer-led organization. The DNA of the organization is also very customer-client led within the FMCG businesses as well. I've just got one quick question, Mohit, if I can ask, and then we'll move to Dr. Ranade. This demand that has come back so quickly, Mohit, is it pent-up demand, or you think that this is going to be sustainable? And just corollary to that, do you think the price rise will start to happen from here on residential real estate?
I think the demand is definitely, pretty systematic and long-term. And the reason, Anuj, is, if you look at the peak of the market in 2012, 2013, the volumes are down by almost 35-40%. Now, in this period of time, the Indian economy was growing at 7% per annum. The income of people were growing at 10-11%. So not only do we need to catch up on the volumes which we have lost in this period of time, we have to also catch up for the the economy growth which has happened. So I think there is going to be a very sharp increase in demand. It's a very sustainable demand. India is a very young population, and the home ownership is something which is going to grow. And I think one other important element is, in the last 1 year, we have all spent so much time at our homes that we all realize how important the home is. And even the millennials who were thinking about, whether they would like to do an Uber kind of thing for homes, I think that most people have kind of bought into this idea that home is something which is important and a very, secure place for them. So I think all these reasons, the demand is there. It was waiting on the sidelines for prices to correct, bottoming of the cycle. I think COVID was the worst possible thing which could have happened. And, people realized that this is the bottom of the cycle, whatever corrections, whatever schemes, everything has been done. And from here on, the probability of price hike is far higher than a probability of price drop. So I think those people who are on sidelines are now coming back. On your second question on price hike, I think we will see a couple of quarters of very strong volume growth, and post that, the prices would start catching up. But I would still keep price hikes a couple of quarters later.
Yeah, and my thoughts are very similar to yours, Mohit, that we would like to see more volumes before the price increase, and maybe there is some elasticity in the price, but as you rightly said, it's probably a couple of quarters away. And hopefully, Mohit, this is a sustainable recovery And it continues, as you rightly said in your opening remarks, that hopefully this is going to be a long growth period that we're going to see on the residential real estate. So thank you very much, Mohit.
Thank you, Anuj.
I know you have other stuff to carry on. I'm going to continue with Dr. Ranade. As I said, he's amongst the most famous names that I know on the economy. And Dr. Ranade, we heard Mohit speak about the Indian real estate on the residential side, and he also referred to the Indian economy, which was growing at 7% per annum, whilst the real estate wasn't really growing at that pace. And then suddenly COVID hit us. Would love to have your opening remarks on really touching probably two or three things. One is, when do we get back the economy to the pre-COVID levels? We hope that the low interest regime, continues. And where do you see real estate within this overall economy, and what do you think is its contribution going to be?
Thanks, Anuj. Thanks for the very kind words, and thanks, Mohit, for the great opening remarks. Wonderful to hear about your views and outlook. And first of all, real estate is become a very respectable term, if I may say so. In a lighter vein, I know that I'm kind of treading on some maybe, but the more formal the economy gets, so we are seeing a transition of more what I say formalization of the economy from informal to formal, and therefore real estate is a very important part of the economy. And let me just illustrate by one little point, Anuj. See, everybody, Marathi, Hindi mein bolte ek muthi asman. Everybody aspires to have a little mutti of real estate, maybe. But if I'm a middle class, a lower middle class person, I can't afford to buy a 2 crore rupee home. But surely I want to invest 5 lakh rupees in real estate. So the formalization of the economy, what I mean is that that's what it makes it possible. I'm not talking about a 5 lakh rupee home. I can get a piece of that pie. So with the evolution of more formal structures of the economy, formalization, whether it's real estate investment trusts, real estate investment vehicles, so all that stuff means, traditionally we say in India, we have some 20-25% of national economy, national income as savings rate, but half of it goes into real estate and land. And we traditionally poo-poo that by saying, oh, that is unproductive investment because it's illiquid. What we mean by that, it's not as if rest of the world doesn't invest in land and maybe gold as well. But there, the real estate, housing, everything is financially integrated. It's very much part of the financial sector. It's very much part of the formal economy. What is happening in India is we are seeing this transition, and every successive year brings much better financial integration of the real estate sector. So I think that's my opening observation. And even before the budget, by the way, in December, as you know, in Mumbai city where we live, had the highest sales, I think, in 10 years or something. And
that's right.
I was privileged and fortunate to be part of that committee which had recommended that stamp duty cut. I think Mr. Deepak Parekh, of course, led and it had a remarkable effect. But just if you allow me 2-3 minutes, the reason I think the budget was a landmark budget is because of, I think, 5 factors. Very quickly, first of all, no new taxes at all, because prior to the budget, there was a lot of talk of a cess, COVID cess, or a inheritance tax, or a wealth, real estate tax or something. So no new taxes, number one. Secondly, a great degree of transparency, frankness, honesty in presenting the true numbers. Thirdly, a sort of a fearless ambition about going to deficit spending all the way to 9.5% this year and 6.8% next year, and going down to 4.5% only after 4 years. So really fearlessness on this thing like the bogey of rating agencies, of sovereign rating agencies, who have always treated India unfairly, I think. So that's the third factor. The fourth, of course, important thing is a huge space opening up for the private sector, including the use of the word P, the P word as they call it, privatization, disinvestment, FDI in insurance. For example, in real estate, the removal of the TDS requirement for sovereign wealth funds and foreign funds that are coming into real estate or infrastructure. And the fifth factor, I think, of course, is the overall infrastructure push, the national infrastructure pipeline. And in particular, I think you know that for real estate in particular, the extension of the tax holiday or whatever, that affordable housing deadline by 1 year, and the huge, the actual data on the infrastructure pipeline. You know, by the way, the national infrastructure pipeline, the reason it's important is because it's got a lot of connectivity stuff going on. You know, whether it's roads, ports, metro stations, and you know, connectivity has a spillover effect on real estate. So I'm not talking about the affordable housing part, but just the fact that you have more connectivity means. So I see that as a positive for real estate, and of course, there's a bunch of reforms in banking, including recapitalization, and the tax exemption, I think, given us on the affordable housing, in some extension there. So I know that one can do a little nitpicking and say, oh, more could have been done. That's always the easiest thing to say about every budget is, oh, missed opportunity on X, Y, and Z. But I think, as you said, and I heard you say earlier in our discussion that this is one of the best years after a gap. You know, what happens is when you have a 6-7 year period of not so inspiring and not so appetizing outlook, you kind of get used to it, and you don't realize when the good times have started. So I think we are probably entering a multi-decadal, if not, you know, a decadal kind of a boom time, if I can call it that. I'm trying not to sound like a Pollyanna, but I can give you more data to support what I'm trying to say in terms of the mega trends of urbanization and demography and so on. But maybe we should get into that with our conversation.
Yes, absolutely. No, Dr. Anand, this is very nice and absolute music to our ears. Because real estate really piggybacks on the economy. If the economy is doing well, more than likely that real estate will continue to do well. I'd sort of 5 or 6 quick questions if I can ask you, because as I said, is amongst the best brains that we have. What can go wrong from here on? I know there's a lot of positivity. Every day you read the newspapers, we are V-shaped recovery, cases are coming down, vaccine is there, the tax collection has been one of its highest, and clearly the government seems to be in control of the situation. What do you think can possibly go wrong, which may derail?
No, before I say what can go wrong, I want to emphasize what you said about vaccine. See, the response to the pandemic is threefold. One is vaccination, which is preventive. Sorry, vaccination is treatment, actually. Then there is the protocol themselves, the social distancing, the masks, and so on. And then there's treatment. You see, the recovery rate also has improved drastically. So we have learned quite a bit in the last 8 or 9 months. So let's not forget that. Secondly, as you said, all the indicators, whether it's lead indicators like Purchasing Managers Index, PMI, or it's IIP, or it's the GST monthly tax collections, or it's the accumulation to foreign exchange reserves, or it's the stock market, all these indicators, lead indicators are going in the right direction. In fact, IMF itself has upgraded the outlook on India, and now IMF's growth forecast is higher than the growth forecast of the finance ministry, So what can go wrong in this recovery? See, there is always the devil is in the implementation. I would say that's one thing that for example, vaccination. Mr. Nandan Nilekani says we should be administering 5 million doses a day. We are struggling to get to 1 million. So I don't know whether I don't know whether you should call this as something that could go wrong, but instead of getting everybody vaccinated in 8 or 9 months, it'll take us a year and a half. But it's still progress, The other thing is, I'm worried a little bit on the fact that the fiscal deficit, while it's ambitious and fearless in terms of the rating agencies, but we still have to fulfill 12 lakh crores of, there's a shortage of 12 lakh crores. There's enough liquidity, as you know, in the banking, but in trying to generate 12 lakh crores and leave enough funds so that the private sector people can also borrow and real estate projects can take off, we might see some upward pressure on interest rates. And that's definitely something to worry about, because if there's one variable that real estate industry is very sensitive about, as you know, especially commercial, is interest rates. So the RBI will have to do a real super balancing act. On one hand, maintaining enough liquidity to make sure that the funding for the borrowing program goes through, but at the same time not have excessive liquidity so that it leads to inflation. And this is, I know, I don't envy the task of the Reserve Bank of India. So I think that to me is something we need to be careful, watch about.
Sir, the IMF, sorry, Kashmira, you were saying something? No. So, sir, on the IMF is projecting, I think various agencies are saying is GDP growth at 11.5% for India. But if you were to look at the degrowth that has happened within the current financial year, effectively it's probably 3.5%, your growth. When do you think we're going to get back to the pre-COVID levels of growth in the economy, 6, 7, 8% that we were talking about earlier?
There is enough room for actually an upside surprise. So this year the growth rate, current estimates are -7. So we are not still through with this financial year, which ends in March. -7 might turn out to be -5, and next year +11 might turn out to be +12.
Wow.
So after we at the end of FY22, which is March 22, we will have grown by around 3% in 2 years. So average growth of 1%, 1.5% per year. But at this stage, we need to only look at the aggregate size. India is a 220 trillion rupees economy. And we're getting close to $3 trillion economy. So even at zero, I mean, this is my favorite line, that when the economy the size of US, when it grows at 0%, that means it produces 17 million new cars. That when you produce 17 million new cars in the US, you're just growing at 0%. You're just producing same as last year. So when you have an economy, India's size is $3 trillion. So when you produce, let's say, 10 lakh new homes, that is zero growth, something like that. So let's not ignore the size of the economy. You're right that we need to be growing at much faster. Aspirational growth is maybe 6-7%. We'll get to that in a couple of years. But if you look at the V shape, so after the V shape, we'll be in 2 years, we'll be ahead by about 2-3% only.
Nice. No, this makes it very clear. And sir, everywhere that we read, when events took place, like the World War II took place, there was a geopolitical change that happened, and the rankings of the countries in the world order changed. Do you think India will go up on the ranking as we come out through this pandemic?
There's no doubt about it. I told you that mega trends, for example, demography, in the next 20, 30 years, 35 years, India is going to add 250 million people to the workforce. In that same period, China is going to subtract 150 million from the workforce. And India and China, this is a century which belongs to India and China, frankly. India and China together account for 40% of humanity. Whatever you might think in terms of Indo-China relationships, this is a century where the center of gravity has decisively shifted to the Eastern Hemisphere. The growth is going to be concentrated in Southeast Asia, East Asia. And India, there is no doubt in my mind that India is definitely the growth center. And the mega trends are the mega trends like demography, urbanization, all these are in India's favor. Going back to your first question, what worries me? I said interest rates in the short run this year because of the borrowing program. But of course, one other thing that we need to worry about, which is not really something that you can deal with on a yearly basis, is that we should not let our inequality get out of hand. Whether it's income inequality or wealth inequality or regional equality, we should keep an eye on that. That's a consequence of growth. That's not the determinant. But this is something that's why policymakers need to keep an eye on that as well.
Yeah, no, I agree with that, sir. If there is inequality, it can create a huge amount of disruption, within the structure, of our country, and clearly that is one thing that we cannot afford at this stage. And the last one that I had is that you briefly touched about it, and it is a little concerning that the low interest regime may not continue for a long. What do you think is the real probability of this low interest regime not continuing, given the balance, as you rightly said, has to be done between liquidity and the interest rates?
Yeah, that was the first question you asked about what is the worrying, what is the risk? So because we have a large borrowing program, and we have a large borrowing program because the government is ambitious about its fiscal spending, it's ambitious about its pump priming, it's ambitious about fiscal expansion, and to that extent, since we need to fund that borrowing, it'll come from the same space of loanable funds, which is the bank deposits and savers. And at the same time, private sector also has to grow. So the same pool of funds is going to be available for the private sector as well. And in that tussle, in the tug of war of the big gorilla, which is Government of India borrowing 12 lakh crores, and maybe another 10 lakh crores being borrowed by the private sector. In this tussle, maybe the pool of savings and liquidity won't be enough, and that's where the interest rates are going up. But remember, the world has lived with zero interest rates now for 10 years, 12 years, 10 years at least, 11 years, since 2009. So if we can't borrow domestically, we should borrow overseas. Those stronger players, especially who have access to dollar funds, should actually access the overseas markets. This year, I believe the rupee is actually going to get stronger. So if you borrow today at an exchange rate of 74, next year you'll be repaying at an exchange rate of 73. So actually cost of borrowing will go down. I'm not suggesting that you take unhedged forex risk, and I'm not saying go and start gambling in the foreign exchange market. But India's exchange rate and rupee is actually on a stable path, stability, and in fact on this it's an appreciating bias. So that will attract foreign funds into India. So we should look at the pool of savings, not just in India, but overseas as well. And to that extent, the interest rate pressure will be lower. But I won't be surprised if there's slight inching up of interest rates from a very low, not very low to maybe slightly moderately higher. That has never deterred growth, by the way. As you know, the mid-90s, we had 7-8% growth when interest rates were at 16-17%.
16, yes, that's right.
We are the 10-year G-Sec at 5 or 6%, so we are much lower. So I don't think that should deter us from the growth aspiration.
And then you're absolutely right, Dr. Andre. You know, the home loan rates used to be 16, 17, 18%. And yet we were seeing, growth in the GDP of 7, 8, 9%.
So you get a 15-year home loan at it's possible.
That's right.
I'm not here to, count any home loans, but I've been quoted that number. So.
No, this is fantastic. I can tell you, Dr. Andre, the audience would like me to go on and on. This is so positive. This is absolute music to everyone's ears. And fantastic if the country, if the economy can really arrest the downfall in the GDP growth within this financial year, and correspondingly have a upliftment on the projected growth of 11.5%, we're going to come out real winners. And as you rightly said, is that the geopolitical situation is going to be in favor of India and China. And whatever we say about the relationships between China and India, I mean, these are the two mammoth economies, and this is where we are going to largely see the growth. I know we've run out of time. I'm going to quickly, announce the unveiling of our consumer sentiment survey. And Dr. Ananda, you'll be quite excited to see what the survey has said on real estate purchase. And they've given their perspective from the lens of the consumer. And this is a beautiful comparison between pre and post-COVID. So if we can unveil the report digitally, Asim, that'll be great.
Sure.
Thank you. Thank you, Asim. I'll just give you a quick highlights, 8 or 10 points on this one, what we have seen during the survey in the report. Clearly from pre-COVID level, when there were 54% of the survey attendees who had said they would love to buy a property and it was an ideal time for them to buy a property, from 54% it has moved to 62%. So clearly it has moved in favor of what exactly Mohit was also saying, that we're starting to see a lot more interest come in from the home buyers. It is clearly an end user market. You will see after I finish giving you anecdotes on the report, there's a presentation 2-minute video on that, and clearly a higher demand for larger homes. And Kashmira ma'am, you and I were discussing about this. We're saying is because work from home has become very popular, people are asking that extra half a room, half a bedroom. So instead of 2 rooms, it's 2.5 rooms. 3 rooms, it is 3.5 rooms. The demand is largely on the peripherally locations of the city. Previously, it used to be the central business district or the suburban. Now they're going to the periphery because they're saying we're likely to come in probably 2 or 3 days a week in the office. We want larger home at the periphery, and we'll spend more money on buying a larger home rather than buying it closer to the city. Huge amount of demand for plotted developments where people are wanting their own plots and they want to build their own home. So row houses, villas. They don't want their destiny to be linked with their neighbors. In the event that the neighbors catch a virus, the full floor was getting sealed. So a lot of demand on plotted developments. There's a lot of demand for newly launched projects. So it does appear that there is belief in the Real Estate Regulation Act, and suddenly we are starting to see demand come in from the home buyers on launched projects, which wasn't really there. Mohit earlier touched on this. The share of reputed developers from financial year 2017, which was at 17% of the overall market, has moved to 44%. At the end of 2020. So what a dramatic change. Exactly what China did, we are looking to do that. There is a new breed of developers who's come in, and Dr. Ranade, one of them is your firm as well, which has got into real estate, into active real estate development. And we hope that this is beginning of an upcycle that we look at it from here onwards. With that, Asim, if I can request you to play a 2-minute video capturing some of the highlights. More of it is going to be available with CII and Anurag. So over to you, Asim. Thank you very much, Asim. I'm not so sure whether it was that visible. The font was very small, so our apologies for that. Dr. Ranade, before I pass it on to Kashmira ma'am, I've got 2 questions to ask you from our viewers. So if I can cover these two questions, sorry to bring you back again.
Sure.
One of them is, would Dr. Anade have thought that the economy bounce back would be so quick?
No, this recovery has been faster. I not only now, go back to the September quarter when we had the results, the corporate, the quarterly results of companies. The profitability on average was going up by 35-40%. So that was quite remarkable. This was the September quarter. Of course, this was profits, not revenues. So the revenue was rising at around 2-3% or maybe single digit, and costs had been contained. But this continued in December as well. So this that's why we are calling it V-shape, because this rapid, this kind of coming back. During Diwali time, we thought maybe it's a pent-up demand, the Diwali stimulus, and so on. But I think it has continued. Then we saw it corroborated with the GST collection numbers. We saw it corroborated with the PMI on manufacturing at 57.7. So we need to see, of course, this sustain. We've now seen. When was the last time, Anuj, you saw post-budget 10 days rally in the stock market? And I don't know, maybe it's 20 days. So
it's actually said 22 years ago. 22 years ago. So you're absolutely right. That they had seen this kind of
something is definitely going on, and I know there are people who say that we are going to see a lagged manifestation of some of the impact on the informal economy and all. But look at, for example, agriculture. We've had 2 consecutive years of record food grain production. I mean, notwithstanding the farm agitation, which is a different topic, but I'm just saying the output from the farm sector, the agricultural output food grain production has been record for 2 consecutive years. And next year also, I think the outlook is for about 3.5%. So it was definitely, there was an upside surprise.
Second one is, do you think that the stock market is going to hold at the levels where it is? It's a tough one, I know, but
see, the only thing more difficult than predicting a cricket match or the rupee dollar exchange rate is the stock market. So it's people think the stock market has gone crazy because it just refuses to believe in gravity. People say if it's gone up, now it's got to be a correction. I'm really not a stock market expert. I know that I mean what to speak of, not just India. It's a global phenomenon. If you look at Apple computers, is now one company market value is $2 trillion.
Can you imagine?
2/3 of Indian economy GDP, annual GDP. I mean, of course, that's the market value. So there are companies which are like Tesla, which made losses for 16 years, and it's probably there it's in the top 5. So stock market. I think well, all I can say is that the stock market is anticipating an earnings upgrade. So next year, if you look at the stocks, 5,000 stocks in the BSE or the Sensex stocks or whatever, BankX, there's an outlook is for improved earnings, and that translates into the PE ratios. So I believe, but as I said, I'm not the stock market expert. I'm happy to look at it and smile, but everybody has to take their own decision. Yeah.
If you got just 2-3 minutes more, I'll just cover the two more very quick questions and let you go.
Yeah. Sure. Thank you.
Is there more investment that we will start to see come into India in comparison to China?
So investment to GDP ratio is a very key number to track. Investment to GDP ratio, and that consists of both public investment and private investment. Now, on the public side, we are going to see this year the budget has announced a 5.5 lakh crore capex, which is actually 25% more than last year. But we are also going to see the infrastructure pipeline, execution. But the key thing to watch out is for private sector investments. So, I mean, I can tell you from the Aditya Birla Group, we have announced nearly a 6,000 crore expansion in cement capacity. We've announced an entry into the paints business. As you know, you might have heard of that. We've announced that we're going to be in the Grasim company is going to be in paints. The aluminum company Hindalco has announced another, I think, several thousand crores over the next couple of years. So, at least I'm not my group's spokesperson, but at least this is in the public domain. So I think, you know, once we start seeing the private sector pipeline, private sector announcements, expansion, that's the key number. Because that spells confidence in the future. We of course had to live with excess capacity. We had to live with so that deleveraging and all. So that was the year. That was what was happening in the last couple of years. I do believe we are going to see more private sector investment capex.
Yeah, well, which is great news because I had not expected that private sector investment will open up within this financial year. So, you know, this is absolute great news. And yes, I did read about your group investing into the paints business, and there's a lot of money going in. And I also read is that real estate is going to be an integral part of the Century Textile. So, you know, hopefully we'll see more active Dr. Ranade on our CII Confluence of real estate seminars. Last one, and I promise I'll let you go on this one, is that do you think that the inflation is going to go up from where we are currently? I mean, there's one small other question, and then we can finish. Is that what are your thoughts around the NBFC crisis? Is this going to continue, or this is now coming to a close?
No, I'll take the second question first. So NBFC world is now divided into two parts. There's a dozen plays in one, and rest of the gang is in the other. So there are about a dozen companies, NBFC companies, who have low NPA ratios, who are able to get funding at very competitive rates, and who have some very attractive projects that they are financing. These are, of course, large companies. So they will continue to do well, and they will continue to get good valuations, and they'll manage their NPAs much better. The rest of the industry will have to, you know, there's a little bit of a challenge. But at the same time, please remember that the RBI has extended the TLTRO, that is targeted long-term repo operations. They have opened a tap of 1 lakh crores which is extended to. This was announced in the last MPC, the Monetary Policy Committee meeting just last week. So that new funding is now available. I believe some of the restructuring might be, you know, the RBI might consider whether they can extend it to NBFC as well. So I think, yeah, NBFCs, as I said, there are it's got this almost two dichotomous groups. One set which is doing very well, and the other set which is a little bit of a struggle. And on inflation, I think, yeah, next year inflation outlook is benign. As of now, we just saw the numbers in December, which came out to be very low, both the wholesale price index and the headline CPI. And the next year, the outlook is for about 5%, you know, so which is 5.5%.
This has been fantastic, Dr. Andre. I'm going to hand it over to Kashmira ma'am. But you know, what a fantastic session that we had with Mohit Malhotra, starting and talking about you know, consolidation and upward trend in the industry, and the industry becoming very consumer focused. And Dr. Andre, you about how positively and you know, pleasantly the economy has surprised us. Hopefully, it continues to surprise us. You know, on a positive note, hopefully the rupee continues to become stronger over the next few months. Hopefully the stock markets continue to hold on to the levels that it is, and the private companies continue to invest, just like your group, who's investing new dollars, new rupees into new sectors and entering the growth market. With that, Kashmira ma'am, I'm going to hand it over to you to do the concluding remarks.
Thank you, Anuj. And as always, it's a pleasure to share the stage with you, and an honor to be with all the other eminent panelists. So thank you very much. And I think it's been a very interesting opening session, and particularly to you, Anuj, for putting this whole thing together along with Asim and the CII Secretariat and the team at Anorak. I think we owe you a great deal of thanks. Dr. Ajit Ranade, as always, how lovely to hear whatever you have to say, and to Mohit Malhotra as well. So, ladies and gentlemen, I think we've had a good presence of very different industry members today, all under one common platform at this third CII Real Estate Confluence 2021. And of course, it was organized in the virtual platform, but we are still all together. I once again congratulate and thank Anuj and his team, along with the CII Secretariat, for creating this platform and bringing all of us together on this very important subject of the real estate industry. And I've always believed that we need this common platform to come together to help understand the nuances and also to understand the emerging trends, not just in India, but globally. It helps us to sensitize not just our members of the industry, but even the government on certain issues. And it gets together so many players that play such a crucial role in the journey of real estate in the country. Congratulations also on the launch of the report, Anuj, which captures and reflects the renewed demand and supply in real estate and more. You know, we look forward to a very positive and a great upcycle in this sector, and you've been very positive right from the start. Dr. Ajit Ranade, President and Chief Economist, Aditya Birla Group, thank you so much for joining with us. We heard very many positives from the budget. I loved your term on the fearless spending, because you know, the way you rolled in to say that this fearless spending is going to lead to a lot more infra spending and connectivity, and obviously it will have its impact on the demand for real estate. So we look forward to that as well. He reminded us, and very rightly so, that the center of gravity is shifting. There's a huge focus on Asia, and the century belongs to India and China. I'd like to focus on the India bit though. And demography is going to play such a big role, and India stands out so well in this, with such a large, huge percentage of young workforce being added every year. So as long as we have jobs and as long as we have livelihood, the demand for homes and real estate can only be slated to increase. So I love your positive take on that, Ajit, and thank you for your valued and very studied words. And we do hope to see more private, corporate, and also global investment in this sector. Thanks again, Dr. Ranade. As always, it's an honor to hear your thoughts.
Thank you,
Malhotra, Managing Director and CEO, Godrej Properties, thank you for joining with us. Your prediction on consolidation, on players becoming more pan-India, the large becoming mega. I know he spoke about consolidation, but I also see room for everyone to grow, because when the large becomes mega, the medium become large. And I think we will see a growth in this industry, and the pandemic has brought such a large change in demand and supply, and real estate has got affected, I think, somewhere in a more real manner, whether you want to say positive or negative. And Mohit brought out an extremely important point, which is about the customer, that he has to be at the core and the heart of the game, and we need to redesign services and other aspects. And I think the customer is at the core. And you know, I've always said this, and I'll say it again, that there is no industry, maybe other than medical, which has more purpose and emotion at the core. Not many people buy more than one home in their lifetime. Everything that we do should be to facilitate this. You know, Ajit, you started speaking about the fair and the equitable growth, where everyone should have a home. And I think somewhere we need to drive this a little more, because it's not a luxury. I think it's a necessity. And we're seeing that the younger generation has suddenly moved away from, you know, renting to understanding the need for buying a home. So somewhere we need to treat this not just as a mere product, but a life change. And if all of us work towards it, whether you're a developer, you're in construction, you're a banker, a financer, you know, it doesn't matter. I think we would do a great deal of justice to the country and its people. And whatever we do, we have to ensure that we grow in a very fair and an equitable manner. That is what the country needs right now. So thank you, a big thank you to all the panelists and the eminent speakers for being part of this conference. I thank you, all of you, for joining us today. Ladies and gentlemen, please make most of the sessions that have been so carefully planned out, and the speakers have been so well chosen. Last but not the least, I'd like to thank all our partners for their support, without which it's very difficult to put this together. Our knowledge partner, Anurag Group, a huge shout out to you and a big thank you to you, Anuj, and the team at Anurag. Our gold partner, the Lodha Group, thank you for your contribution, and the Vaswani Group, who is our silver partner. Thank you to all our partners for supporting this real estate conference. I've also been requested to announce that the Honorable Chief Minister, Ms. Uddhav Thackeray, is unable to join us today, but he's going to try and join us for tomorrow's session. So we look forward to that. With this, I conclude the inaugural session. Thank you, Asim, for the opportunity as well. and let's embark onto the first panel discussion. India residential real estate sector embarking on a new growth path. I now hand you over to Mr. Kailash Babbar, Senior Assistant Editor, Economic Times, and the moderator of the session. Welcome, Kailash, and over to you. Thank you, everyone, once again.
Thanks, Kashmira. Good afternoon, everyone. COVID-19 has impacted our lives and businesses alike. Real estate sector, particularly the residential part of it, was really struggling with various issues when the pandemic broke out last year. But nobody could have thought that we would come out of it with such flying colors, and this would prove to be a blessing in disguise, with housing sales witnessing a spike across markets. I'm joined by a distinguished panel of experts to discuss and decipher exactly how the market has performed, why, and what does it mean for property markets going forward. So let's hear it from them. Anuj, I'll come to you first. Anurag Research has already said that new launches and sales started recovering from the second half of 2020. Could you please share your thoughts and perspective on this as to what exactly led to this recovery?
So Kailash, thank you very much for moderating it. We have a very eclectic panel, and there are many better speakers than me. Abhishek Lodha, Bowman, Venkatesh from Shapoorji Pallonji, Rohit Gera, and Dhaval Ajmera. So you're going to get a lot more real data from these, five gentlemen. But honestly, Kailash, when the pandemic hit, I thought this financial year was almost gone. There was going to be very little that was going to happen. And then, beginning of May, Bangalore opened up, Kailash, and we started to see the same level of activity as what it was pre-COVID. And soon, within a fortnight of the footfalls coming to the sites, launches started. And I was like very, very surprised, Kailash, that, how come these launches had started so quickly? And I thought it is an aberration because Bangalore as a city had done very well. It is an IT city, people's jobs were secure, people were working from home. Also, the city was very cosmopolitan and it behaved very nicely during this pandemic. And I thought that, this is an exception. And then NCR opened up, it followed the same trajectory. And then Bombay and Pune opened up, and it just opened up like a roar. And you're going to hear, these gentlemen who are on the screen talk about how these sales have happened. The moment the sales started to happen, Kailash, we started to see the unsold inventory start to go down very quickly. And that's when the new launches, started. I remember speaking with Abhishek Lodha. He was doing his new tower launch of New Cuff Parade at that time. And I think this was sort of August time. And amongst the early starters, to say is, let's go out and let's, do this launch. And what a roaring success that was. And, we see Abhishek's numbers now coming in. I don't know how much of it he's going to be able to speak, given that he's filed for the IPO. But, honestly, those numbers we had only seen 6-7 years ago. And that's where the market has come back, both on the sales side and on the launches. Admittedly, Kailash, it is lower than the financial year 2019-20. But where the positivity is coming in is that we thought it was a complete wiped off year, but it hasn't been. It's nearly 50% of the last financial year's activity. We've got still 2 more months to go. So we hope that it'll be able to cover up a little bit more distance. But clearly the launches have been, exceptional at this point in time than what we had anticipated on the back of very strong sales.
Sure. Abhishek, Lodha Group develops projects across the spectrum, catering to ultra-rich and even affordable housing, mid-income segment as well. Could you share your perspective on how the recovery was in each of these segments during the year?
Thanks, Kailash. Great to be on this panel, and great to see so many friends on the panel, and Anuj set it up quite well. I think unsurprisingly to your question, the recovery started off with the affordable and mid-income segment, where very clearly the demand is a lot broader and more resilient. I think July, August, September were largely driven by that segment. I think from sometime in the second half of September onwards, or maybe even at the end of September, we started seeing that the premium segment started picking up. And sort of really the thought process behind it is that the demand for housing got quite crystallized during the 2.5 months of lockdown, that when people stayed home, completely packed within their homes. We of course all have different forms of lockdown or work from home even now, but people were completely packed within their homes and realized that they needed something more from their home. Somebody wanted extra, somebody wanted more outdoor space, somebody wanted a garden to go down and walk in, and so on and so forth. And as each person could focus from sort of kind of balancing their immediate emergency of making life normal, they got on to the next most important thing, which was buying a house. So for those who were salaried, life came back to normal slightly faster. Because they could start, their salaries started coming in. They didn't, the job losses were nowhere close to what was speculated, and they went ahead with the buying decision. For those who were in the premium segment, who are the CXOs or the business owners, they needed to focus for the first 2 to 3 months after the reopening from the heavy lockdown to stabilize their businesses. And once they had had the time to do it, and they've started seeing the I would say some impulses of recovery in the demand in their respective businesses, they went out and started making the big decision on upgrading the house. And that's why from September onwards we started seeing the pickup in the premium and luxury. But as we stand today in January, I think the looks quite resilient across different segments of the residential market. And I think it's really to be seen that over many years now, we've had a 6+ year down cycle in residential real estate, and it's been the longest down cycle since records have been kept. So at least in the last 30 years, it's been the longest down cycle. And given that down cycle, an upcycle is there for the asking. I think with the supply coming down, which it clearly is, because there are only so many developers, and many of them are, on this panel, who people are willing to buy under construction from, and lenders are willing to give debt to build product. And that is the only supply which can come in, because if you can't get debt and you can't get customer advances, you can't build residential real estate. And you can count those names on your fingertips in every city. And therefore supply is bound to come down. And the Indian middle class, which has long suffered, because 50, 60, 70% of the Indian middle class savings are in the home. And if home prices remain flat or go down, their wealth suffers. So the Indian middle class is due a little bit of an upcycle. It is due the recovery in home prices. And I think that will happen over the foreseeable period of the next 2 to 3 years, which really is going to be the driver of India's economic recovery, the housing sector and the growth in home prices.
Sure. So across segments, we are seeing this resilient move. Baman, how has been the response from the NRI fraternity in the last few months? Has the COVID outbreak accelerated the demand from this profile?
So, Kailash, before I start off, I want to say a big thank you to Kashmira Mewawala. She was winding up the last session and she said all the right stuff, which everybody should know about real estate. Everybody, according to me, Kailash, has woken up after this COVID to understand that life is finite. Only money in the bank is not going to work. Okay. And most people want a good home. Like Abhishek mentioned, people are looking for a garden, people are looking for a balcony, people are looking for things that they can literally, they got a time to stop and really understand that, anything can happen at any point of time. I think beyond this, even developers have kind of woken up to the opportunity. And like Abhishek mentioned earlier, there are a few developers who walked the straight and narrow, who kept on building their brand, who kept on working towards, making a company that could be counted for delivery. These companies have seen and will continue to see phenomenal amount of traction from the buyer base as of right now. Most importantly, I think, we are also seeing a whole new buyer base coming in. Everybody wants a home in India, partially because I'm saying the Indians want a home in India, partially because of the fact that A, it is home, and B, also the fact that we've handled this pandemic far better than most people expected us to, and also far better than most of Europe has, or even the Middle East has. And I think this has led to a big surge. Add to that, millennials who were never buying homes earlier. We used to sit on conferences like this and say in the future the only thing that will take place is renting of homes, and these people will want to move from one place to the other. I think everyone has now realized that the importance of a home, or a place where they can anchor themselves. And of course, some of the horror stories that happened during then, that rented premises, the tenants had no say. The leave licensees had no say. They had to just kowtow and accept whatever the society was, or the building management was saying. So I think overall it has led to a surge in buying, but we should not forget that interest rates are at an all-time low today. Investment avenues are near to nil, if you ask me. There's a lot of opportunity, because of the fact that your interest rates being offered by banks are so low that inflation is eating into your money. It is a time for real assets to get sold. This good surge, or this good time for buying homes, will continue for some time to come, unless of course interest rates take a certain peak tomorrow morning, and or if developers would unfortunately want to kind of maximize on let's say the aspect of profit. As long as, and this is my view, MMR has a phenomenal demand for good products, and good products will continue to be the differentiators today. And MMR has a phenomenal demand for good products, and this run that we are having right now should continue. Of course, Anuj would be able to add more light to it, and then the other esteemed panelists would also. Has a phenomenal demand, and we are seeing good amount of traction coming in from Europe, good amount of traction coming in from the Middle East. NRI buyers are looking at real estate as of right now. And forget NRIs, I mean, I'm seeing a lot of people who were sitting on the fences earlier are making the move and are moving in over here. Everybody's realized a few pennies more, a few pennies less don't matter. A good home does. And over here, I want to say a big thank you to the state of Maharashtra. What they have done is absolutely at the right time, given that impetus to buy. You won't believe, I mean, Kailash, you have written articles about it. The 4% reduction in stamp duty that came about was such a big, juicy, how do I say this, bite that people wanted. Anything that we give, and we developers do give advantages to our home buyers, they don't get perceived as that. But when the government gives, boss, everybody just says this is for real and we will go for it. Yeah, Anuj, that's true. That's it, Kailash.
Sure. So that has been a big game changer, particularly in big markets like Mumbai, Pune, and rest of Maharashtra as well. So we can see that being followed in Karnataka, Madhya Pradesh, and now even Delhi government has reduced the circle rates. So hope this will go on for some time. Venki, affordable housing developments have been a focus area for government and home buyers as well as and given that developers have been incentivized by the government through various policy actions, what more do you think can be done to ensure that the developments grow rapidly to cover the housing shortage that we have in this segment?
Yeah, thank you, Kailash, and very good afternoon to my fellow panelists and all the participants. So I think just before replying to your question, a couple of more points. I think for everything to work, there needs to be a hardware and a software. The hardware is the more scientific thing, that today the interest rates are at one of the lowest levels. And also there is a prospect of growth next year. While this year there is going to be a degrowth, or there has been a degrowth vis-a-vis last year, we know that FY 21-22 is going to be a much better year with the recovery. And that's the hardware which is driving it. And the software is that, in our minds, we've been at home for 4-5 months. It's probably never happened in our lifetime. The emotion for owning a home is, I would say, at its, absolute high. And the combination of these two is actually leading up to great amount of demand, whether pent up or otherwise, for homes. Now, talking about affordable housing, as you rightly said, I think the government has done quite a bit. A couple of things. One is that, they had a size restriction earlier saying that 60 square meters and 30 square meters, that is 60 square meters in metros and 30 square meters in non-metros. But they also introduced a 45 lakh kind of limit on the ticket size. I think so. If they can kind of increase that or do away with that, because that came sometime in the interim, earlier this 45 lakh was not there. I think that would kind of really increase the demand, because what is affordable is very subjective. In Mumbai, even a 1 crore house could be kind of slotted in an affordable category. So that's one thing. The second is overall for the sector, I would say, whether it is for affordable housing, although the GST is at 1%, this entire set off of GST, which was there earlier, which was kind of taken away, has added to the cost base of the developer. So, I think we can't have the government trying to generate demand. Correct? The demand has to be generated through your track record, your product, and your outreach to the customers. Where the government can help is to ensure that the cost base of the developer is kept within reasonable limits. And he does make margins, because if you are getting into a 10, 15 lakh housing category, it's very difficult to make the margins. Correct? Over there, you have to kind of focus on your costs where the demand is actually on the higher side. I think somewhere, if a couple of things like this could be kind of initiated or added on by the government, it will go a long way in kind of helping developers like ourselves and the other developers on this panel really focus on the affordable housing sector in a wholesome manner.
Sure. Dhaval, your projects are spread across various cities, including Mumbai, Pune, Ahmedabad, Bangalore. In your opinion, how do you see these cities map up to against each other in terms of, say, demand or demand conversion right now?
So hi, thank you Kailash, and thank you Anuj for inviting all of us here, and it's been a great pleasure to be with all such a great eminent panelists. Kailash, I would say, what we have observed, and probably in our case, probably it was like a peculiar case where our stocks got ready luckily just before COVID in Bombay, and during this COVID time we saw great demand. If I compare my cities to let's say Bangalore, Ahmedabad, and Pune, I would say Bombay was a higher surging number than the other cities as well. But if it looks like, as Anuj rightly said, that when COVID started opening up in Bangalore, Bangalore started coming to normalcy, as it was. It was like it just took a switch on and a switch off break. So when it was like the lights again switched on and the sales again started the moment the lockdown opened. So Bangalore has always been a very steady market. It always saw a rise, but at a very steady pace. It was not like a surging going up like a curve, but it was going up very steadily, and that's what Bangalore has seen so far. As far as Pune is concerned, luckily stocks which were like, for one of our stocks which was like on a very high ticket price on the prime area, which was not moving too fast during this lockdown, that turned out to be a lucky factor for us, and we saw good numbers of sales happening in that project. Obviously, clearly I would say winner for us in this time was Bombay, which saw a great number of sales happening during this lockdown. So if I have to put in numbers for the cities where we work in, let's say Bombay would be 1, Bangalore would be 2, Pune would be 3, and Ahmedabad would be 4. Because Ahmedabad I would not be able to compare too much because we didn't have too much of stock. So, but otherwise also there has been, so overall in generic, I would say demand for ready stock was, at the same levels everywhere, be it any ticket price, be it a 10 lakh home or a 10 crore home. But I saw that demand was there for ready stock in all these projects and all these cities, sorry.
And Kailash, I would just second that what Dhaval said is this is the trend that we've also seen. That number 1 was Bombay, followed by Bangalore, followed by Pune, and then Ahmedabad. Even in our trajectory, so God has been kind to Bombay, and Bombay has really seen an upswing in this sales activity. And I was just thinking, whilst all of us were saying, I must be like, Abhishek must be such a happy man. The timing of his IPO couldn't have been better. With all positive talk that is going on around the real estate.
Sure, true. So the irresistible Mumbai. Let's go to the man who has. Rohit, you have significant presence in Pune across asset classes, but you never ventured into the financial capital of the country. Any specific reason for staying away from Mumbai?
I think because Bowman is. No, that's just on a lighter note. Thank you very much for having me on your panel. Reason why we chose a slightly different sort of strategy, right? From Pune, I had to move into Goa, which is a very different consumer profile. It's type of audience, and we just said from a de-risking point of view for us, rather than one state, if we are going to expand, then let's go into another state because you're dealing with the jurisdictions are completely different. The buyer behavior, the drivers for the completely different. And when we saw the 2000, and that kind of played out for us really well. So 2008 meltdown time, while the other cities we saw very slow sales, Goa was actually pretty well. So in fact, we had the fires burning as Goa kind of picked up. So we also then moved into Bangalore, and we're just doing IT office parks there. But otherwise, the other part of the strategy then is also to then be international. California. So we've kind of skirted Mumbai. I only use Mumbai to get the flight. But we just chose that that's not the place where we want to be. We want to be present, and I also think that places like Pune and Goa, Goa is not that deep, but Pune, for example, has enough demand. And for this product line that we do, which is child-centric homes, I think there's tremendous demand in Pune itself, and then we look at other cities as we go. Mumbai maybe sometime down the line, but not in the immediate.
Sure. Anush, do you believe the housing market has bottomed out in 2020 and the next few years, until say next 3-4 years, will show an upward trajectory continuously?
So Kailash, very interesting question. Difficult to answer it for everyone, because my thought is, Kailash, in 2008 when we had the global financial crisis, and you'd recall sort of mid of 2009, the market came back with a rush. It was like all the fishes which were on the shore, the tide came in and it took everyone inside. Back, and everybody went back into the deep sea, and it was all hunky-dory after that. I think this time the tide is going to be very selective. It's going to pick up people like who are on the screen. Like Abhishek and Bowman also mentioned it, and earlier in the first panel we also heard Mohit Malhotra from Goodreads speak about it. This is the trajectory that China followed. After the global financial crisis, we did not follow that trajectory. I think we're now following this trajectory, and we put together a research report, and Kailash, you had covered it earlier. It says that the share of leading and listed developers from 17% in 2017 has grown up to 44% at the end of the last calendar year. And this is what we saw in China over 3 or 4 years after the global financial crisis. So we're seeing the same here. So to answer your question, Kailash, we're going to see the bottoming out of the market for select developers. The overall market has shrunk. The overall market in terms of sales, in terms of launches has shrunk. Yet when you look at the balance sheet of all these panelists, who are on your panel, you will see is their sales would have grown disproportionately. So in a shrinking market, they're going to be eating somebody else's market share. And that is where I feel it would have bottomed out for good quality developers who had corporate governance, who were financially disciplined, who were delivery focused, who were customer centric, and they are the ones who are going to have an upswing over the next 3 to 5 to 7 year cycle, whilst there will be many others. I mean, there's another data point that I can give you, Kailash, is that in 2012, if you put all the developers down at the time who were there are only 53% of them working today at the end of 2020. So clearly it is getting consolidated, and when we meet up with the select of developers who are not on the screen, for them there's a lot of pain still going on. And it is not as positive as what we are sort of discussing here on this panel. And for them to hear that it has bottomed out will be wrong. I think it has bottomed out for the select good quality leading developers, and they're going to see an upswing. And I do hope, Kailash, that you're going to start to see the price rise in the next 2 quarters happening in this, and then that's when conclusively the market will recognize that there has been an upswing that has happened on certain products with certain good quality developers.
Sure. So Abhishek, like Anuj mentioned earlier, this time seems to be the best for your IPO to hit the market. In your opinion, can we assume that the bad times are behind us now?
Kailash, while I can't comment anything around the or related events, but I do think from a market and industry perspective, most certainly, as I mentioned earlier, we've had a very, very long down cycle. In my opinion, the correction started in 2018. You saw the results in late 2020. The correction process started after IL&FS, where all the misdirected financing, largely from various NBFCs, stopped coming to the market. And that started making sure that supply was coming down. See, we've always had good demand in our country. Your newspaper did in the Sunday magazine about, I think, November or something, a big piece on housing. And it showed that housing demand sales have grown from 200,000 units in 2010 to about 297, let's say 300,000 units in 2020. So you've seen a 50% increase over the last decade. It's not a huge jump, but it is a good gradual increase. The same report also said that the supply or unsold stock had increased from 350,000 units, which was in 2010, to 950,000 units in 2019 or 2020. So the problem in this industry and why prices have been flat and why you've had many projects stuck in the middle is because we were just building way more than what the market is capable of absorbing. With the correction in the debt markets, the market is becoming fundamentally more sound. It is more structurally sound because supply and demand are now driven by the ability to sell as compared to the availability of debt coming from someone. And that is going to make sure that we are going to have a healthier, structurally more sound market going forward. I completely agree with Anuj's views that there is going to be a limited number of capable developers, and I think that's already the case in every market. Rohit will be in that bucket in Pune, somebody else will be in Bangalore, and Dhaval will be in Mumbai and so on, who are capable of selling under construction. And that is really what is going to make sure that, limited number of players, good quality, good corporate governance, less hassle with consumers, therefore lesser risk premium for the residential real estate space. So this is what the office market went through between 2009 and 2013. Prices went down and supply went down. And then you've seen the, slow and then a faster bull run from 2014 onwards. And my perception is that with the same discipline now coming to residential real estate and a limited number of players, very similar to the commercial characteristics, we are going to see, a very strong, long-term, fundamentally sound industry, which there is no economy in the world where without housing flourishing can the economy flourish, whether it's the US, UK, Australia, Singapore, China, any other country. And this is foolish for India to believe that we can grow employment, we can grow middle class wealth without housing flourishing. Housing is the backbone of the economy. Housing has to thrive for the economy to do well, And I think now the conditions are in place and the government recognition is in place. We've seen what the Maharashtra government has done. We've seen what the central government has done for affordable housing. So I think all the things are pointing in the right direction to make housing the backbone which drives this economy forward.
Sure, sure. So, Baman, union budget for the year was announced recently. Do you think there was enough stimulus that was given to the sector that continues to be a key contributor to the nation's economy, GDP? What more do you think could have been done?
If you ask a developer or if you ask anybody what more could have been done, I can send you the laundry list. But quite honestly, I think there are a few things which aren't directly aimed at us, but will improve the economy largely, thereby leading to overall growth. One of them is the infrastructure spend that has been decided by the government. I think it's a good move. They should stay put with it. They should continually keep investing money in the infrastructure. Two advantages out of this. One is that money will get spent. It will come down to the lowest common denominator. But more importantly, you will also change these paradigms of, why a country like India cannot have, fantastic infrastructure. To just name a few things that I feel the government should do going forward, which is, budget is already done now. One of them, and the most important one, I think, which Venkatesh touched upon, was GST. I think this GST is a huge cost, and we in Mumbai feel it most because of the fact that redevelopment projects are being, you wind up paying a GST of 5% on apartments that you're handing over to people who are already living out there, after paying 18% on your cost of materials and services. I think it's a horrible thing for Mumbai city, where it is a recorded fact that you've got 19,000 old buildings that need redevelopment and are precariously are literally just holding on, and every monsoon we see about 10, 12, 15 buildings coming down, lives getting lost. I think it will be a statement made by the government that they really care. Other than this, I was hoping that these income tax limits on homes which are purchased. On the one side, a purchaser of a home is actually helping the economy, like Abhishek just mentioned, that we are the backbone of an economy. On top of that, I don't understand why they have to have limits. I mean, if someone in Mumbai wishes to buy a 10 crore rupee home and he's paying the GST, he's paying the stamp duty, he's paying everything on it, then why can't he, at least get a set off on his income tax against the kind of interest that he's paying on the home? I mean, let people go out there and make their choice for a larger home, because a larger home would mean not only more in terms of what money he's put up for the home, but also in terms of the services that he'll employ going forward. So the creation of jobs take place not only on our sites, but much after we've left, and in terms of drivers and cleaners and watchmen and whatever have you. But more importantly, what that does to the city is the city collects taxes, property taxes, which keep the city, going forward, right? And this, if you did an analysis of a piece of land that was lying vacant versus a building there on it, and that building being totally occupied by residents, I think the kind of property tax that the city collects is maybe 8 to 15 fold from the same land in terms of the value that they are creating year on year. So I have a lot of things I can ask for, right? I can keep asking for it, but the right time to do it would be before the next budget. The one thing that I can ask the GST Council to do is take cognizance of the fact that they need to drop GST to 1%. Their terminology of affordable housing is, well, ill. It's not right, because in Mumbai city you don't have 45 lakh rupee homes. They need to change that, and after that, just put a 1% uniformly, if at all they're not giving us input tax credits. So one ask, that's it.
Sure. Let's hope it happens soon. Sure. Venki, Shapoorji Pallonji has a brand presence and legacy for several decades. As the current markets are traversing towards home buyers preferring to deal with only with established and reputed developers, how do you think the brand trust and legacy is helping you secure faith and confidence?
Yeah, so Kailash, as Anuj rightly said, I think I think the demand probably has shrunk, but it's basically the selective supply which is causing many of us on this panel to be euphoric on sales, not only in the next 6 months, but probably for the next 6 years. But if you trace the history of our company, it's probably a 155-year-old company. And we have started off as construction contractors. And I want to bring that point over here. I think the reason someone buys a Shapurji home is, of course, because of Shapurji Palanji real estate, but also because of Shapurji Palanji engineering and construction. This entire value chain, which is traversed in the way in which we are not only developers, but also we construct our own homes. I think that's a very important bearing on any customer's mind when he's buying a Shapurji home. The second is, the proof of the pudding is in the delivery. So when you talk about what you see is what you get, that's number one. Second is the quality which you have to deliver. The third is on time means on time. I think in many of our advertisements, we just mention this, like a promise is a promise and on time is on time. So I think you have to kind of deliver the product to what you have said it would be, to the quality and on time. I think if you keep doing this, the brand trust will only keep growing. I think one is, yes, you can't rest on your laurels. One project you delay can kind of defeat this entire brand trust which you have gained on several other projects. So you have to deliver on time and you have to deliver to the quality which you have promised. I think these two things, if you keep in mind, then I think you will be able to kind of increase your brand presence as you move ahead.
Sure. Rohit, with this short-term shortage of new supply, as the developers may pause to gauge the situation and focus on clearing existing unsold inventory, will the prices soon move northwards in key markets like, say, Pune?
I think there's a couple of different things at play. At a very localized sort of Maharashtra level, these new unified rules which have come in, especially when you look at that in light of projects which are currently ongoing, which need to transition. These rules say that they will come out with the policy, and there's no plans currently being sanctioned or approved across because this transition policy hasn't been defined. Why that's important in this conversation is because that throttles supply, right? When the new rules come in, everybody goes back to the drawing board and norms and so on, so that delays supply coming out. What we've seen is inventory as the demand. Real estate is a long cycle business, projects with long cycles. We had inventory which was available, which in the last 3 to 4 months, customers come back in and start picking up that inventory. And as a result, we'll be able to act fast enough. Even those of us who have, project, and I don't think we'll be able to act fast enough to take care of all the demand that's gonna come back in, coming back. The result of this will be that we will start seeing prices starting to. I think we've seen flat to negative prices for the last 5 to 6 years. The sector taken one knock after the other, and I'm not going to list them because we've all kind of lived all of this. What's interesting is with every knock, the overall sentiment and the overall perception is that, oh, this has happened, real estate prices will come down 30%. Demonetization happened, it's going to come down 40%. GST has happened, oh, there's so much black money in real estate, now the prices will come down. So the outcome of this over the last 4 or 5 years, and there's been a gradual downward trend as overall prices are concerned. We've seen our input costs go up. Inflation continues to affect us. We had the artificial hit from the government when we were supposed to, you could pass through GST. Suddenly you take a hit of GST as well. So from the developer's perspective, I think, we've all seen for the time when we could raise prices. And I think just the demand coming back, look, there's a tremendous need for housing. The question is, when does need turn into demand? And we are seeing that demand back and already has come back. Also, real estate is self-fulfilling when you talk about pricing. Everybody says prices are going to rise, prices will rise. And we're now in that sort of framework is sort of aligned for those prices to rise, and as a result, prices will rise. And that's going to wanting to jump in, and that's going to lead us to a further scarcity, and that's going to cause prices to go up again. Now, I don't believe, if you ask me, I don't think that we're at all going to see the stages, the price have seen in the past as steep as we've seen them in the past. But if you look at, real estate from a longer term sort of perspective, and if you look at a 7-8 year prolonged sort of flat to almost a downturn, time you have to revert to the mean, right? And this is that time when I think that we will start seeing, as all these factors, we'll start seeing prices move up.
Sure, sure. Double with the demand looking better in the recent period, what do you think the developers can focus on? Do you think launching new projects is more important or clearing the existing inventory?
So definitely clearing the inventory is the prime most focus should be, because I think that's the real asset which you have, and it's like the liquid cash which is there in your hand. And then if you try to focus, so I personally believe, and I would say, Abhishek and me had a conversation, and he was of the very clear opinion that clear your inventory first and then do anything else, because that's the prime thing what you have. So obviously that really turns out to be true. So I think the most focus should be clearing inventory. But at the same time, I think, where people don't have, inventory left, and I think it's the right time to launch projects, because people, and we've been speaking indefinitely, and people today know that, probably today is the right time to buy homes, be it any segment. Obviously it depends on the location, it depends on the area, and, the size. But I believe for a Bombay, an affordable, as Boman rightly said, we cannot have a 45 lakh rupee home in Bombay. So I think for Bombay, a 1 crore or 1.5 crore is an affordable home. It's a very affordable home. So it's something like, city like Bombay, or probably, you have those kind of, price levels, or you have, anywhere where you feel the demand is better and can absorb. I think it's a good time for any project to get launched.
Sure. Anuj, like we discussed earlier also, all of us are noticing that the home buyers prefer to deal, last few years we've seen home buyers prefer to deal with established developers, reputed ones with good track record. Do you think this will lead to further consolidation, as the pandemic has created difficulties for many businesses to survive?
So I think, Kailash, it will. If you were to look at the three sources from where the capital is going to come in or debt is going to come in, is Abhishek mentioned that at the start of his of the session, that the lenders are only going to give debt to good quality developers. So first is, you're not going to be able to get debt if you're not a good quality developer. Second, most importantly, Kailash, under construction, I can tell you, we guys can't sell of not a good quality developer. So which means that the not so good quality developer has to complete the entire project. Now, there is no debt available with the guy. If the developer has money in their pocket, then they can complete it. Once they get it completed, it'll sell. No problem in that is. But unlikely many people have that kind of money in their pocket to be able to, without debt, without reasonable sales, be able to complete the entire project. So that will lead to consolidation, because of a C-grade developer will be very difficult under construction project to be sold. Third, I feel, Kailash, at some stage we will start to see private equity come into play. Why I say is, look at the people on the screen. Bowman's already got private equity with Keppel Land come in. Venky's already got private equity in the Joyville. With several pedigreed sovereign guys, including the World Bank, ADB there. Abhishek is going in for the IPO. I'm sure Dhaval and Rohit either have the private equity, which I'm not aware, or will get in this. These are the guys who will attract private equity. Unlikely that you will have a marginal developer attract private equity. Now, the buyer is not coming to you under construction. The debt guy, the lender, is not willing to give you money to construct. And private equity is really not there. So unless you are a developer who has a lot of money in your own pocket to be able to go out and complete it, in which case you'll be great and you'll do it very well once you complete the project and come out into the market to sell. But I dare say there are many players like that. There are only a handful of them. So that's where I think consolidation is going to happen, is because your finances are going to drive the consolidation, and the buyer set is going to drive that consolidation. And even, Kailash, I'll say, even in your ongoing projects, the lenders are wanting to withdraw from a weak developer that they have funded, and they want the weak developer to marry the strong developer. Not many of these guys want to marry, because they married many projects. As a result of which, the lender is not being able to find many people like them to actually hand over the project, take it away from the weak developer to the strong developer, and actually say, Kailash, to the strong developer that, Mr. Strong Developer, you don't need to put a penny. I will put the money to get it completed, but I need your brand name. I need your positioning. I need your power of the brand to go out and market. And that's where you will see is that even on your existing projects, there will be some kind of an influence by the lender to move that project to a stronger developer from a weaker developer.
So goodwill and reputation will come. Sure. Abhishek, with the COVID outbreak, we've noticed a trend of rising preference for large townships that offer a better controlled environment. Like Raman also mentioned, people want that sort of to operate over such environment. You've been developing a township on the outskirts of Mumbai. What have been your observations? During the last 6-7 months, what was the demand pattern like? What did you observe there?
Kailash, it's a great point you make. And I think it's a fact of urban living in India that the infrastructure which is generally available in our cities is very weak. It's not just the roads or the footpaths which are a problem, but generally, if you look at sewage, you look at drainage, you look at waste collection, you look at spaces for children to play or people to go out and have a walk on, so on and so forth. So really, our cities don't really offer much for people, and there the role of these townships becomes a lot more important. Whether it's Palava, which is now already home to more than 125,000 people who live there, and growing at a steady rate of about 10 to 15,000 people each year, or other large developments that we've done on the suburban parts of Mumbai, like Upper Thane, Amara, or even close to on the Parna River, on the Mumbai-Pune Expressway, Belmondo. We just saw that people really enjoyed living in these places. They enjoyed living in these places because these spaces worked even during the lockdown and during COVID. The infrastructure kept going. Our teams were out there on the front line every day, risking their lives, if you may, in the first 3 months, and making sure these places are working. Services were provided, people were delivered food and to their homes if they didn't, they weren't coming down, but everything was provided. The sanitation worked, the drainage worked, the garbage handling worked. People could go out and walk around because these spaces are lots of open spaces and wide footpaths and so on and so forth. And this has really opened up people's lives and minds about the quality of life and how the home has become a lot more important. It's no longer a place to sleep because it's now a place to live. You work there, you study there, you spend much greater proportion of your waking hours in your home now. And this is not the last pandemic of our lives. You had SARS, you had MERS, you had Ebola. It's just that India was lucky and didn't get hit by those. India got hit by COVID. But in our lifetime, you will get more. And the home, and therefore, if you're smart and want to make your life resilient for yourself and your family, you have to not only buy or have a place to live, it has to be a resilient place to live in, which will function in different kinds of circumstances. And these townships, I think, have shown how strong they are, how resilient they are, and how they offer a much stronger and better quality of life. And we've seen that in the sales numbers, I think, on an ongoing basis. And that's what I started in a different manner when I said mid-income and affordable housing led the revival. And really all these developments fall within the mid-income and affordable housing bucket. And it's really the desire of that segment of the population to buy a home where they can see themselves living for the next 10 to 15 years and in that context have all these aspects within their control and within their reach: the school, the hospital, the retail mall, the high street shopping. I don't want to go into a mall anymore, so I want good quality high street shopping, so on and so forth. I don't want to really entertain myself in the cinema. I want, big gardens, and I want the sports area to enjoy. So I think people have become more aware of what they want from a home, and the townships, especially where the infrastructure has been put together and which are maintained well, are really something that that people are very, very keen to go and stay in. And to add to your point earlier on price appreciation, these are the places where we've clearly seen price appreciation, meaningful price appreciation over the last 6 to 9 months.
Baman, luxury projects have witnessed a rise in demand during the last few months of 2020. As the home buyers look to close deals and gain the advantage of stamp duty cut, do you think this is a sustainable demand or this is just pent up?
First of all, let me just add to what Abhishek said. I kind of agree entirely with him. Townships have become the buzzword. People love to live in premises that are well taken care of, where they can be certain that there are service providers who will take care of most of their needs. We observe this in our Thane and Virar projects, where our teams, like Abhishek's, were constantly in the front, taking care of people, the humane side of, just even taking care of the stray animals out there. The fact that older people especially, were cared for, their families were constantly kept informed about, their well-being. We did see a lot of change in human behavior during the pandemic. And if Abhishek is right, which I hope you're not very right, Abhishek, about a couple of more pandemics in the coming. But if he's right, then people definitely will flee to safety, and safety only comes out of places that are well designed, have services taken care of, have people who are well trained to take care of most of the requirements of that place, have the right kind of infrastructure in terms of being able to buy the necessary items and still have enough open spaces to be able to go out and kind of play. I think this is also, Kailash, reflected in luxury developments. If we observe the kind of luxury developments, especially in Mumbai city, that have really sold well, are those with beautiful infrastructure, great services provided, have the right kind of things required for lifestyle, for a proper lifestyle. One of the complexes that I can talk about, which has seen a phenomenal amount of value appreciation purely during this pandemic time, has been a project we've done, a redevelopment project we've done in what I call Upper Juhu. It's called Elements. Out here, our teams took care of all the requirements of the people. The residents of the building had great amount of open space to be able to come out and recreate, walk around in. Kids, in spite of not meeting with each other because of parental this, would still be able to walk on terraces that were wide and be away from all kinds of crowds. We saw immediately when the buying started, we literally sold out every last apartment out there, and it was incredible. We did not do any fresh round of advertising. All that happened was everybody who lived there called up his friends, family, and said, if you want to live, this is where. So I think the future is sustainable, whether you are in the affordable or in the high value segment, provided you got a great product, your designs are good, provided you've planned your product to have great services back them up, provided you have a team that kind of has established itself and can continue to do so as people who are capable of taking care of all your needs and demands. I think people are not moving towards locations as much as they are moving towards these factors in a building. So it will become, your services will become what your brand will be known by in the future. Your engagement with your customer will now become perpetual. These are things that we never thought of earlier. We always thought of building a home, handing it over, and then you're done. I think perpetual connect with your customer. Your customer is going to become a feature for you, who's going to go out there and sell your products. And I see, if you ask me really, Mumbai will see an upward movement in well-designed luxury homes, and people will start spending their money. People will start, as much as I spend on a car or I spend on a holiday, and I want the best, I'll start wanting the best even from my homes. And the best will not come out of Italian marble or whatever. It'll come out of the best gyms. It'll come out of the best sauna spas. It'll come out of the best, open spaces. It'll also come out of the best services provided by the teams that take care of that. I think all of this is going to be priceless in the future. We're going to choose to buy what will give us comfort in the long run. Yeah, that's it.
Sure. So it's very clear that COVID-19 pandemic has provided a very new perspective to home buyers, developers, and even financiers. And I'm sure everybody is taking feedback from their home buyers on this and developing for more projects in line with that. So thank you all for a thought-provoking and insightful discussion. Thanks everyone for joining in. Stay well, stay safe.
Yeah, Kailash, I need to ask you a question.
Sure.
Go ahead.
No, Anuj, you go on. I have a request of him, that's all.
Acha, okay. Kailash, what is your view on both the office and Resi? I mean, you're perhaps the leading journalist on real estate in India. And you would love to know your views, both on the office and on the residential.
So commercial was, I'm sure you guys know, was anyway doing great. And with this COVID-19, there was a sort of a pause, and everybody thought work from home would emerge as a very big challenge. But the mainstay of Indian commercial office segment, IT seems to be doing well because of what all is happening globally. And that continues to drive the office market, and deals are continuously happening. And most of these are global occupiers operating out of India. So that seems to be a completely sound market. Residential, particularly, various markets have seen spike. Initially, I think first 3-4 months, everybody thought now it's a doomsday. But I think, like we all discussed just now, COVID-19 has actually turned out to be a blessing in disguise for everyone. And home buyers have a different mindset now. They are looking at buying homes, bigger homes. In some cases, they are also looking at buying homes which would offer them a study or an extra room for, say, the office setup. In Rohit's case, I read a story recently where people are buying homes in Goa, with office sort of setup. So that's a kind of different perception that people have now, perspective that people have built. And with that, we are seeing good amount of sales getting generated across markets, not only in, say, Maharashtra or Bangalore. And so the only thing that is left to be seen is what happens post once these limited window period offers get over, or the government support goes off. So if that continues beyond March, then I'm sure we are in for a good upcycle.
Fantastic. Kailash, in Punjabi, in Hindi, they say, "Tere muh mein ghee shakkar." Because after a long time on residential, Kailash, I mean, last I remember 2009 to 12 or 13, we'd seen. So, it's been sort of 8-9 years. We haven't seen, and I jumped from commercial to Resi. And I was like, is this the right decision? And 3 years later, it looks like it is the right decision.
Yes, it was a long winter.
Yeah, that's right. Sorry, Boban, go ahead.
And Kailash, being from Mumbai, I have one request of you: keep hitting this GST nail as many times as you can. It is a big, how do I say this? Take away from, or it's a big drawdown on our ability to redevelop this city, which is what is a need for the city itself to have a new lease of life. So please keep talking about it, because I think you're the most well-read and respected journalist, for the real estate space. I'll be happy to read more on this from you.
Sure. Thank you.
Thanks, guys.
Thank you.
Thank you. All the very best.
Thank you. Thanks all.
Thanks, Rohit. Thanks,
very
everybody.
much.
Thanks. Bye. Thanks, Anuj.
Bye.
Thank you, esteemed panelists, for that excellent session. Ladies and gentlemen, we will now be beginning with the roundtable, Pandemic Remodeled Retail Business. How does the future look? May I first invite the session moderator, Mr. Pankaj Ranjan, COO and Joint MD, Anrock Retail. May I now invite the esteemed panelists, Mr. Mohit Kampani, CEO and MD, More Retail, Mr. Riaz Amlani, Founder and CEO, Impresario, Ms. Pushpa Bector, Executive Director and Head Retail, DLF, Mr. Yogeshwar Sharma, CEO and ED, Select City Walk, and Mr. Ashish Kapoor, Founder and Restaurateur, Whiskey Samba, The Wine Company, and Trust Kimono Yo-chan. Welcome, esteemed panelists. Ladies and gentlemen, we'll be now beginning with the session. Mr. Pankaj, you may kindly take it over. Mr. Pankaj, you're on mute. Kindly unmute yourself.
Sorry. Hi, Mohit and Riaz. Welcome to the panel. Since we still have 5 minutes before the other panelists join in, so we'll just wait for them to join in if it's okay with you, because the official time to start was 4:45.
Got it. Hi, Pankaj. Hi, Riaz.
Hi.
How are you?
Good, Riaz. How are you doing? I don't know if Riaz, Mohit, you know each other.
Well, I know Riaz by reputation, certainly.
Yeah, everybody should knows him by reputation. He's the guy who makes us drink more. He puts up these fancy places for us to go to, which we love.
There was no reputation.
Yeah, no, absolutely. I love the place social. So your reputation is very good and affordable. So let me put it that as well, and young. It makes us feel younger when we go to those places. We have Yogeshwar as well joined in. Hi, Yogeshwar and Pushpa. Both of them have joined in.
Hi, Pankaj.
I was introducing everyone. Hi, Pushpa. I was introducing. I said Pushpa and Yogeshwar definitely don't need an introduction.
But your neighbors.
Yeah, the neighbors as well.
We are good neighbors.
We are good neighbors. So we have, we're just waiting for Ashish to join in. So all of us are well in time. We'll just wait for Ashish to join in as well. Then we'll start.
Mr. Ashish is joining in a minute.
Sure. So is it just generally, so is it work from home? I can see Yogeshwar is definitely not at home. He's at work. Is Riaz still work at home for you?
Well, my job is literally about going from place to place. I mean, I've never been much of an office guy. Even when it was not work from home, I used to be in office once in 2 weeks.
Yeah, you were always at the restaurants, hopping around from one side to the other.
Yeah.
Mohit, are you back in office in Calcutta?
No. Yeah, I am in office today, but I'm not coming in regularly. About maybe a day or two a week. Yeah, not more than that.
And I know Pushpa has been going to work regularly as well, and Yogeshwar. Both of them I know have been the centers also.
Yeah, we want people to come to the mall now.
You have to set you have to get the people back. Not only the customers, you have to get your own employees back as well, right? So if you doesn't start, it starts from you.
Yeah, it has to start from.
But I mean, I don't know about Calcutta and I mean Delhi. I can tell you, it doesn't, except the mask. If you take it off, it doesn't feel like COVID anymore. I mean, I was in the mall both in Saket. I went to both DLF place and Select also. And you're looking at the office buildings. Suddenly the car parkings just started filling up. I remember when I started coming to office in September, the office building, only one basement used to get full for car parking in September, October. Now, almost out of the 3 basements, 2 basements are getting full for the parking. So it's definitely looks a lot more positive in the for people in Delhi NCR at least. I don't know, how is it in Calcutta, Mohit? Is it people back on the streets completely and working back to offices?
Yeah, I mean, for Calcutta certainly is almost back to normal, I would say. I think even our stores, the footfalls are 90% plus to pre-COVID. Retail is open everywhere for months now. It started from Durga Puja, and I think post that business has been kind of, by December was close to normal. Yeah, pretty fast recovery.
We have Ashish, I think, has also joined in. Hi, Ashish. Hi, Ashish, can you hear me?
Hi guys.
I know Ashish, Riaz, Pushpa, and Yogeshwar know him well. Mohit, Ashish is a fellow restaurateur like Riaz, and behind some very successful restaurants in Delhi and Mumbai, particularly. And so he's got a good lineage, and I thought it'll be a galactic panel today. So if it's okay with you all, I know we're early, but we can start. We're 3 minutes early. We can formally start the panel. So welcome everyone. Thanks for really taking the time to actually come on the panel. Really appreciate you being on board. It's a mix of a panel of different facets of retail. I thought it will give everybody a good perspective who all are listening in terms of what's happening really in the post-COVID world scenario and what's the outlook from your perspective from each of you. So let me start with you, Pushpa. So what's been the journey like now? Since I know you opened your mall sometime in May, June, right? So really, tell us what's the pulse on the ground? What's been the story in the last 6 months? How it ramped up? What's it looking like now? What's your outlook?
Well, thanks, Pankaj, and good afternoon, everyone. Well, actually, we started out slow. I think all of us started out slow, but we really hit the court running in quarter 3. And just like we had anticipated, the sales went up to around 75 to 80%. So in a way, when I look at now the January numbers are back to around 85% pre-COVID numbers. So if I look at sale to sale, this is the good news. The not so good news is certain categories are still struggling, which is ethnic wear, because events have not started, weddings are not really happening in full swing. Even formal wear, everyone's working from home. Look at Riaz, he's in permanent shorts now. So it's because of that, we're losing a lot of revenue. All of you have stopped wearing formal wear. So that's the other problem that we all face. And kids wear, to an extent, it is going up. I can see it going up. But these are the two categories, I would say, which is still struggling. F&B has actually done extremely well. I'm happy to say that though our cyber city had very low occupancy as far as people coming to work is concerned, Cyber Hub, really has reached around 70% of previous levels already with its blend of retail and F&B. So I think overall optimistic. Also, I would like to add that DLF had given a certain support scheme, and we have been on point so far vis-a-vis sales and rental expectations and the support. So we've been on point with it, and we feel that next year, the way I look at it is, life is not going to get back to normal immediately, especially these specific categories. But we do see that, sales will get back to its normal buoyancy by quarter 2. Once the sales happen in June, July, we think that it's going to be life as usual. So, overall, the scenario has been one of challenge for all real estate developers and retailers included. But this coming year, we have not just optimism, we also think that we perhaps may see a weaker come the October-November season. Once the vaccine is in place, one can expect the pent-up demand to come out in full force. That would be an optimistic scenario to the H2 of 21-22.
Great, Pushpa. Great to hear that. And it's definitely encouraging when you hear that every day looks better than or every month looks better than the previous month. And coming to that, to Yogeshwar, I know you operate like with Pushpa in the same sub-market and have a have a client base which is, both of you work together to build that, which is a very strong client base in this market. And also are the trendsetters for the fashion retail in India, because both the malls of DLF in South Delhi and Gurgaon and Noida, as well as your mall in South Delhi, are really looked at by all fashion retailers, beauty, everyone, and saying that if the numbers and the confidence is there in your markets, then obviously the road to recovery is much better. So what's your personal take has been, Yogeshwar, in the last couple of months, what you've seen? Has the world is the way we're doing business going to change, or is it going to remain the same? What's been the outlook, or what's the outlook as well?
So, I mean, like Pushpa clearly mentioned, I completely echo the sentiments that it has come back so quickly in a way that numbers are reaching 80-85% in most of the categories, except, I mean, cinema, fitness, and entertainment. I mean, these three are laggards, and for many various reasons, I mean, very known reasons. There are new trends also emerging that people are coming here for serious shopping, in the sense the conversion has become better. For example, the footfall recovery would be in the range of 65%, and the sales recovery would be in the range of 80%. So that clearly shows that people who are coming for an objective. I mean, they are not only roaming around. That's a good perspective from the mall side. Also, like beauty category and the athleisure category has really done well, and they have crossed even the 1920 numbers. And electronics, for example, electronics, athleisure, and beauty. These are the three ones which are leading. Food business, I mean, I know Riaz and other people would know it better, but from a mall's perspective, they are doing better. They have started doing better. Not as good as 1920 numbers, but the growth is happening, and due to the number of seats getting reduced. That's one challenge we are facing. That food court, for example, we have full control. So we know that from 400 seats, we had gone down to 120 seats. And the sales recovery is up to 60 to 65%. So in a way, it's a very good recovery considering the number of seats got reduced. Now we are applying for outdoor seating, which has become more easily, and government has allowed us to sit outside, to spread outside the seats. So overall, I feel I completely agree with Ms. Pushpa that the recovery is very good, and it has not yet reached 1920 numbers, which is likely to happen as June, July this coming year, 2021, June, July. And during the festive season, we hope to cross 1920 numbers. So that's the pattern. Takeaways have become, I mean, one of the most important factors in the food court and the restaurant joints. I mean, we feel that takeaway, which were very negligible earlier, but has grown to a significant percentage in some of the restaurants.
Tell me, Yogeshwar, you talked about the outlook and the numbers encouraging. Pushpa talked about the outlook is encouraging as well. But has the way retail changed permanently? Some part of retail changed permanently. Has this pandemic changed it? Like I'll tell you, I was speaking to a very large premium retailer who have lots of brands from premium to bids to even some luxury as well. They were telling me there's something called home shopping, which has become a big, strong phenomenon. And they were talking about that as high as about 25 to 30% of the sales are coming from home shopping, where it is personalized selling on WhatsApp, whether it's personalized selling or communicating and sending catalogs out, or reaching out to their customer base or loyalty customers and selling it to them, where the customers not necessarily needs to come out now. Is that a temporary phenomenon, or is it a permanent phenomenon? And are these new factors like this coming up, which will change the way we look at retail?
Yes, absolutely, Pankaj. I mean, when we opened in June, on June 8th, there were practically very negligible footfall in the mall. Nobody was willing to come to the mall, and we were all forced, I mean, retailers as well as mall developers were forced to think out of the box and do something to reach out to the consumers. Now, I'm very happy to say that some of the brands, we don't have a luxury center. I mean, some affordable luxury brands, they were not even allowing to deliver online or to deliver home, because they were not even agreeing to the couriering the product, because it was against their policy. But happy to report that most of them have now agreed to send goods home via a mechanism, whether we collect the money or they collect the money, or we have a via media aggregator who will collect the money on their behalf. So definitely the trend will stay. It has stayed even after June. I mean, it started in June, July, August, and it has stayed, and it's growing day by day or week by week, where people want goods to be delivered at home. That's one. Second, people also want some affirmations or some help in selection of products. For example, one very big TV anchor called up and said that I need this particular product from a particular shop. So I just tried my luck, and I said, okay, why don't you speak to a personal shopper? There could be other things which can be bundled and could be better options available. Why don't you want to try? At first, the person said, no, I mean, I know what I want, but then got tempted and said, okay, let me speak to that personal shopper or the stylist, the lady we have who knows more than most of us. So she could upsell much more. So though it's a small, humble beginning, but everybody who uses this personal shopper or home delivery service is get hooked onto it and spoiled for choice. Then I mean, they start doing that on a regular basis.
I would like to add something here, Pankaj. I've noticed that when it comes to personal shopping, it gives much more credence in the luxury space. Because in the luxury space, people want to be sort of taking their time and understanding the story of each product, and it is expensive. And I've seen that we have had much more success in personal shopping when it comes to our luxury shopping at Emporio or Chanakya vis-a-vis premium, if I do a comparative. And I think that's a mindset change that is here to stay. But is it going to change completely the way of our shopping? I don't think so. I think this will still remain, a space which will be around 5 to 7% of our overall pie in the long run, because experiential retailing will come back in full force, and it is coming back in full force. But when it comes to luxury, people may prefer discreetness, and people may prefer that personalization, and they would like that personalization. I think that's the different connotation that I'd like to give.
And that brings me to to Mohit, to you. When retail really organized retail, what I remember when it started and when we started doing the first stores of organized retail and really started with the hypermarkets and the supermarkets business, the whole thing was about people picking up that cart and going on a weekend with the family and going and picking up groceries. For them, that was about experience. That was the biggest experience they were talking about. And I know that you've been very successfully run multiple retail chains and now leading this big expansion plan for more and really getting into tier 2, 3. And, we've gone to tier 4 towns with you as well and discovered new towns in India. And actually our teams have to struggle to sometimes find on the map what's city which you're talking about, where does it exist to get your store. But do you think is COVID going to change somewhere the format of retailing for formats like yours as well?
Yeah.
And
So,
in tier 2, tier 3 particularly also?
yeah. So Pankaj, I think, the impact of the pandemic, we should not underestimate, but I don't think we should overestimate it also. Okay. And I'll explain why. I think much before COVID, if you see what happened in China is an indicator of times to come. China at this point of time has hardly about 800 organized hypermarkets, and all 800 of them are prepared for omni-channel business much before the pandemic. And that's the future of retail. Dedicating one channel for a category is just suicidal. So you have to exhibit omni-channel behavior in whatever asset you have, and physical hypermarket pretty much so. I think the future for us very, very clearly for the industry is omni-channel. Now, interestingly, that phenomena is not, even for food and grocery, is not limited to large metros. It even goes to, tier 2, tier 3 towns. We've been very surprised in small towns with the acceptability of e-commerce for grocery. Now, this is counterintuitive to all the thinking that we've had, but consumers there, and yes, it may be a lesser number of consumers, do have pressures on time, are looking for convenience, and therefore want e-commerce. It's the same set of needs which their metro cousin has. So this is not a phenomena which is limited to a select set of geographies and towns. Certainly the cluster of demand is more biased towards metro, there's no doubt about that, but the future is there too. So which opens us to a very exciting possibility from a brand perspective, which is that you be open to extending your brand deep down, penetrate further into what we call Bharat, far more than we ever imagined before. And that's why we are having those conversations, because that consumer is exhibiting the same behavior. And of course, if you can become truly omni-channel, and which means the consumer must seamlessly go between online and offline, okay,
then you're going to really, really win. That's the benefit the pandemic is given, which is it's opened up consumers to online shopping. I think that's how we look at it. Will it sustain at the same levels? Of course not. Physical retail, of course, discovery, like Pushpa was mentioning, is, urban India has lack of recreation options. So going to a quote unquote mall is an important family recreation activity, if you were to call it that. So all that will remain. I think what it's done is it has accelerated omni-channel behavior. That's how I look at it, and also opened up Bharat to omni-channel. And I think that's a very exciting future for us.
So, Mohit, I think everybody looked at and said that this 7-8 months really obviously became digitalization, really pushed the envelope for retail in a new way. And you rightly pointed out then in saying, and when we've been talking to you for planning of your stores and all the store discussions which we've been having, all these calls of the last couple of weeks, you always dedicated certain area and say, listen, this is to support the online retail, and which you have in your stores as well. Apart from this, any big trend which you have seen in the food and grocery segment where India is shopping differently, which all of us as an industry can pick up? Because food and grocery has been really in the front line of retail story to tell us all about always in India.
Yeah. So I think counter to the restaurateurs here, and we benefited because because F&B outside of the home got impacted. So stay at home, of course, is a very, very big consumption theme. And all categories which contributed to that, from processed food to fresh, we saw a huge uptick, especially in the neighborhood supermarkets. I think some part of that will certainly stay, because it's like a recent article which I just read. I forget the magazine, which is that the husband has discovered the kitchen for the first time in their lives, And so I suspect some of it will stay. I mean, I certainly have rediscovered the kitchen myself, and therefore, and the kids don't let me forget that on a Sunday now. So I think some of that will stay. It's a little sticky. Some of the manufacturers have been a little agile. Some of the local brands have been a little agile, and I must say some of the restaurateurs have been very agile. So the meal kits and all have. I'm sure all of you've seen them on your Swiggies and your Zomatos have been a little agile. So I think some part of that will stay, but the larger majority, which is 80-90%, will unwind back.
Very, very good anecdote you picked up and saying that the husbands have discovered the kitchen. And I was having a very interesting discussion with a real estate residential developer who's predominantly a residential developer in the NCR. And I asked him what suddenly the big rush in, the residential market has happened, particularly in cities like Delhi, Mumbai, even Pune and Hyderabad and Bangalore. Why is everybody buying better new homes and stuff like that? These are obviously lots of big reasons, pent-up demand, all those reasons, home loans, financial reasons becoming better. So, one thing which he mentioned, and absolutely what you talked about, bang on, that the rest of the family has discovered, particularly the husband discovered rest part of the house. He's gone to the kitchen and realized that, you need to upgrade the working environment for your wife as well. You need to upgrade where your washing machine is kept, and you need to know where the washing machine in the house is, and the washing machine needs to be upgraded as well. That's why a lot of the consumer electronics and the home improvement reasons have come in.
That's right. And Pankaj, both our comments are gender neutral, by the way. I mean,
yeah,
yes, absolutely. Sorry.
I would like to intervene here as the only female around.
No. That was gender neutral.
That was neutral. Even in the vice, I've discovered that there is.
Absolutely.
Pankaj, this country shouldn't have a pandemic.
To appreciate your wife, to appreciate the spouse. I would not say a wife, the spouse. So, coming that, with that.
Well, I'll put it in a more gender neutral way. Yeah. I think home chefs, be it millennials, be it dads, be it even moms discovering newer recipes, I think home chefs became a thing. And when home chefs became a thing, that is a gender neutral thing. And then people started discovering new ingredients. And Mohit will agree that suddenly these cheeses started flying off the shelves, or different kinds of pastas, or different kinds of, ramen noodles started flying off the shelves because people are discovering new recipes. And that's the interesting part. So what I would like to tell both Ashish and Riaz is they're going to get more evolved consumers coming to their restaurants now and say, oh, do I want this? No, I don't want this cheese with that wine. I wanted this, I want the Bordeaux with my meats. I don't want it with my fish because it doesn't go. I think that's the problem.
Yeah.
And that's the challenge.
And that brings me to Riaz. He's both Ashish and Riaz are smiling. So Riaz, is the fallout of this market a positive way that the good quality F&B spaces customers will appreciate better quality now? Is that a big new trend for you guys?
Well, that is always the hope, Pankaj, to be honest, that people will appreciate quality. And, and there are many different types of customers out there. Hopefully, the rise in home chefs and people cooking at home, if you look at the positive side of that, maybe there'll be a newfound appreciation for your restaurant. Because, not all experiments go according to plan. But I think one of the things that we've really seen is that trust has played a very important factor in the recovery of restaurants. We've seen, especially when it comes to dark kitchen, we've seen people moving from, just going based on offerings or based on discounts. We're seeing customers come back to restaurants that they know and trust. And we've seen that as a big because I think earlier people were just being driven by discovery and discounting. I think trust has played a very important factor. Customers like to go and order from restaurants that they've seen the inside of, they've been to, they've visited. I think that has been a big changer because for us, earlier there was, in dark kitchens, it was just anybody who was offering you a discount or, offering you tremendous value was getting the business. I think customers are now beginning to appreciate concepts, and it took a long time for restaurants to build customer confidence to get customers back. Right? Till September, things were really dire for us when it comes to dining in. October, maybe we saw about a 50% return of business in our businesses. November was a little bit more, and every month is grown, a little bit more, maybe 10%. And I think we are now in some cases at about 80% of pre-COVID levels. In a sense, each city has had a little bit of a different rate. We've seen tier 2 cities really bounce back much quicker. Delhi has been the slowest of the blocks, so to speak, because of course in November things were bad just after Diwali in Delhi. Still have a lot of seating restrictions in place. We don't have 100% seating in Maharashtra. We only have 35% seating. In Delhi, we have 50% seating. So we're still suffering from that a little bit, right?
Riaz, but tell me frankly, now the last one to get all approvals to get open up was the cinemas. And now they've got full approvals to get even opening up 100% of their seating as well, with all the other sanitation requirements and the others. They are only suffering right now because of the lack of content also being one part. But do you think it's now time to ease off the restrictions of those seatings? Will that help your business?
Okay, they'll definitely help the business, but there's also now a sudden overhang. We are seeing cases beginning to rise a little bit. And if you look at the worldwide trend, India was one of the last places where COVID really came in hard and hit hard. If you remember, India was at a very low level when Italy and Spain and UK were going through a raging pandemic. And we've really seen the numbers drop in India, but at the same time, we've seen the second wave emerge in other markets. So we are praying and hoping that this will happen. But there's a growing sense that the cases might start increasing because we're seeing increases in Maharashtra, we're seeing increases in a lot of states now. So we're hoping and praying there's a temporary thing. So we will have to continue maintaining the measures. I think that is only fair. So it's only fair to our restaurant workers, to our colleagues, nothing short of frontline workers in a sense. But we will continue maintaining certain practices, a certain amount of distancing between tables. We won't be packing up our bars anytime soon. So it'll take a little while for us to come back to pre-COVID levels, but we've learned to try and work within what we can do and what we can't do. So we've tried to maximize within the restrictions that the government has imposed. And again, it's different from state to state, right?
Riaz,
Timings are. Yes,
So
Pushpa.
I hear that Mumbai is going into lockdown today.
Well, we've not heard a definite thing, but there's definitely rumors that there might be a lockdown in case cases don't stop increasing.
Oh,
But I'm not sure. That's not a confirmed report so far.
you know, and that brings me to an important point, Ashish. And I remember having a conversation with you when this pandemic thing was just back from the pandemic, you were just opening up, and you kept telling that this is more detrimental to the business, the start, stop. Uh, and because by the time the customer gets used to it, you again stop it, and then again you start it again, and then there's a significant cost and effort also required to open up particularly restaurants, because you have perishables, particularly remobilization of staff, building back the confidence. So what's been your takeaway from all this which is happening, and where do you see the perspective on the outlook for the F&B industry, particularly from your perspective? Is there things changed? Is the models changing?
I think I'll answer the latter part first, Pankaj, on the changes, the positive changes I've seen, and then I'll come back to the cautious piece. I think on the positive part, one big benefit that we have derived out of this terrible situation is that the guest in general, the your government has all become sensitive to the fact that open air spaces add a lot of value to a restaurant or a bar's ambience. And if you saw, years back, and the growth of the malls with DLF coming in after having built Cyber City, after coming in Horizon. So the more open areas and spaces restaurants got, they got a chance to become and showcase their international side, because world over, alfresco has always dominated and done well. But post COVID, what came out clearly was that guests felt a lot more comfortable sitting outdoors. And luckily, the government was also supportive around this measure. So I think going forward, this whole ability of building spaces with a lot of open area is something that will continue and will do better, which is why cities like Goa are also doing a little better. And genuinely, cases are a little fewer than what people anticipated because of the open air surroundings and not being in an enclosed air conditioned space. Secondly, I think the benefit that restaurateurs derived out of this, again, I say terrible situation, was productivity. Ours was a business where guest pampering was a constant. Bottle, putting in the soda, etc., etc. Today, if you see, that requirement from the guest has also drastically reduced. They don't want too much staff hovering around them. So that itself has led to great hospitality, but higher productivity and better utilization of staff. We also had that reverse migration. We also had a reverse migration issue where initially, when the restaurants reopened, we didn't have enough staff, and staff had to double up doing multiple things, which again led to greater productivity. So I would say that the good takeaways out of this, there will be this sensitization towards outdoor spaces within developments, and productivity has increased. But that said, I'll agree with Riaz that just because the bounce back definitely has happened, and thank God it's happened better than we expected. But let us not forget that we owe a responsibility because of the nature of the business we are in. Restaurants, whether it's staff or whether it is guests coming in, it's very different from a shopping experience. So although we want the bounce back, although we have to ensure business comes back, but we've also got to do it in a safe environment where the start and stop doesn't happen. In restaurants, with social media, the way word gets around, so it's a genuine reason. So I think that cautious optimism is the way that we are treating the business. And unfortunately, in our business, there is no omni channel as such. Yes, delivery and takeaway has taken off, but if you look at majority of the dining market in India, it's largely been a dining in market. Delivery and takeaway have been very, very small segments of the market. And world over, what do you do to a bar? what do you do to a fine dining? These will never be, there will never be omni-channel solutions to this, just like a cinema. So I think there's cautious optimism, got our fingers crossed, and hopefully we'll, all swim through this in a positive way.
And Ashish, do you think from a F&B industry per se, like any industry, and Mohit can add to it also, and Pushpa can and Yogeshwar can relate to it, that whenever an industry opens up or a new sector opens up, there are a lot of people who get into that sector, and then there is a time when it gets consolidated. So it happened in and I know it's in the hypermarket business, it happened in the shopping malls business. Every real estate developer wanted to make shopping malls, and then realized that it's serious business. Every business house was getting into hypermarkets business and realized it's not a simple business. It's a lot more different. The same happened in F&B as well, and F&B particularly because everybody looked at it as a very fashionable business to be in. Has the pandemic story kind of matured the industry that it's the future is going to be with a certain X number of players who know this business, who's serious about this business, than anybody who's got money and can hire the best designer and a good chef, open a restaurant? Will that story stop now, or it'll become more mature?
Pankaj, that's a great question. That's a great question. World over, the entry barrier into the restaurant business has been very low. If you have a little bit of capital and you have access to Google, you think you're an interior designer, there's no problem to open a restaurant. I don't think the entry barrier will change over time. Not at all. World over, this is one of the most aspirational businesses. Everybody at some point wants to open a cafe, restaurant, or bar. I don't think the entry barrier will change, but I think what will definitely change, and I'm seeing the change, is on two fronts. Firstly, the guest. The guest is going back to places that they trust. The guest is going back to restaurants that they truly believe adhere to certain standards, adhere to a certain quality. And we've seen that reflected in the average per cover. We've seen, the guests who are coming in are spending more. And it's not just revenge buying, but be it, their understanding and consciousness of what they're eating, they're more mindful, want a better experience, but they want to go to trustworthy places. So that will benefit the branded professionals. The second big benefit is, I think, the ecosystem, be it the government or be it developers, they've realized that the branded players are serious, have always been serious about quality and safety, and bringing back, the guests in a genuine way. And I think that will definitely benefit the industry in the long run. But if you ask me, will it stem people's desire to open restaurants? No, I think this is one of those aspirational needs which will constantly be there.
Coming to that, to Pushpa. Yeah.
I said more home chefs now means more people keeping at the restaurateurs. There has been
but do you see
it's the non-restaurant pushing in right now.
It's true. It's true.
So what Riaz is saying, Pushpa, do you see more inquiries between you and Yogesh? Do you see more inquiries coming from the new gen of retailers and F&B guys?
Absolutely.
Well, let's put it this way: there is a new wave of more, of people who have discovered, the passion of cooking. They want to go entrepreneurial. I have seen that happening. Well, we will wait and watch on what will happen, but definitely that is there. The other thing is, I want you to understand that the government is also making a lot of push on entrepreneurial energies. So that's also promoting people.
Pankaj, no, absolutely. I agree that there are too many queries coming from young entrepreneurs that they want to do restaurants. And my full-time job is to show the PNL of the already existing people. And it is not very attractive, and it's very, very difficult business. Every business needs some attention from the promoter, but in this business, the person has to be fully involved. I see all the restaurants in the mall who are doing well are the ones where the promoter or the owner or the person responsible is fully involved. Fully, even the moment they take their eyes off, something goes wrong. So I also wanted to congratulate Riaz for, last week I went to social in Mall of India, And I was really pleasantly surprised with the service levels, with the music being played, the online ordering, and the time taken to deliver, and the quality of food. I mean, really, hats off to people. It's the most difficult business I see in our center all as well. It needs full involvement, but not at the cost of killing the new entrepreneurs. I mean, if the person is really, like, we opened recently a small brand called Harajuku Cafe. So they are not from F&B background. They really want to do this. We tried to demotivate them to the best of our ability. They held on to it. They wanted to do it, and then we took the chance, and it has come out well. Like, first month has been very good. So this business is really tough. I mean, I just want to say this. I don't want to discourage people doing this business, but then that how will they spend 12 hours of the day should be known to the person who's getting into it, because these 12 hours of work, or 12 to 14 hours maybe, is a hands-on job. Keeping, like, you take example of Big Ching. I mean, the promoters are fully involved. You see Social or any Ashish, anybody who is actually doing a good job has to be fully involved. You can't delegate this business.
Incumbents are all challengers at one point, right?
Yeah.
Sorry?
I said all incumbents were challengers at some point.
Yeah, that is true. That is true. But having said that, I think what's going to happen is the trend will see emerging smaller concepts. There will be a lot more. If I see what is the trend in F&B, I would say the trend will be emerging of the smaller concept. The tight 20-seater, 30-seater, that could be a trend that will be here to stay for, a number of, because the larger concepts suddenly found that during the pandemic, it's not easy. They have large staff, there is a huge cost, operating cost. So if I see at a macro level, this will be a trend.
And that, Pushpa, that's an important point. And that's why I want to pick on Mohit. Mohit, you've been in a business and ran, particularly right now also you're running the supermarket and hypermarket, very successful business. But your biggest competition and challenger has always been the local kirana store, because you're ultimately competing with that guy. But tell me, how will that guy survive? Because a lot of the retailers in VC organized retail, particularly in large cities, the competition still tends to be these smart shops which come up where there's more personalized service. So do you think that will change? And a lot of people gravitated to a hypermarket and supermarket business because the supply chain is more stronger, or there is a presence of omni-channel?
So, Pankaj, great question and a long answer, but I'll try and give you the 60-second version of it. So firstly, and this links back to the first point you raised in the conversation today, reality of consumption is more channels equals to more consumption. Okay, so whether it's personalized shopping, that's a reality in consumption, agnostic of the industry you are. If you find more ways to service the consumer, and I'm talking about the industry as a large, you will end up in more consumption. The hard cold fact, and this is Nielsen data, and I've been in this industry for 15 years, is the general trade in India is strong, thriving, growing. Thank you very much. And they will continue to do that. They may change. I'm a great fan of the Indonesian market. I track it very closely. In Indonesia, the general trade has morphed into self-service outlets by becoming part of a large franchisee network. So there are big brands like Indomart and Minimart, etc. India could go in that direction, or India could go in a direction of where we will be strongly independent, and there will be quote unquote a cohort of service providers who will help them upgrade themselves. Okay. Recently, I saw a paper by Eddie Carney, which is talking about what will it take to upgrade a kirana to self-service independent. Okay. I think India will go the latter way. It will not go the Indonesian way because we are fiercely independent. So I think the independent self-service will just get upgraded, and they will thrive. Their penetration numbers keep. We are a nation of shopkeepers. It's a hard reality. We have 1 crore retail outlets. Retail provides employment to 12% of India. After agriculture, it's number 2. It cannot go away. We will have a social problem. Forget an economic problem. So that's one. I think you made a terrific point in your previous question, and I'll just quickly address that. What has pandemic done? So yes, certainly this was not only a test of your P&L, it was a test of your balance sheet. And one of the books which I very recently read is Anti-Fragile, Nassim Taleb. I strongly recommend all of you read it. My view is, and it's basically the philosophy is that industries which survive a tough black swan kind of event are the strongest, or companies. And so imagine if you are on a board and your company has thrived, or your shareholder has thrived through a black swan event like this. What will be your outlook on the future? You will say double down, triple down, quadruple down on this business. Because if it's able to handle such a massive change, we are in an absolute winning environment. So that's my answer to you. Yes, certainly, all that consolidation and all of that issue will happen. But if you've gone through this and you're a boy, are you going to double down big time on your business? And that's why you see the market capitalization of what I call anti-fragile companies going the way they are, because that's what essentially the investors are doing.
Absolutely, and I completely understand, agree with you. And whatever history keeps telling us, you rightly said, black swan events like this. We've seen some companies coming out very, very strong, and they continue to survive over the years. And we had a Lehman crisis, which is all of us. I think all of us were very much part of our working lives as well. Have seen that. So we've seen one global financial crisis and a pandemic together, and hopefully makes us stronger as well. That gets to me to Riaz. Riaz, remember when we were drawing up the business plan for social? We talked about putting up social all across the country, tier 2, tier 3 cities as well. So like Mohit's business, which is now really penetrating tier 4 and tier 5 as well. Do you see the F&B business emerging stronger with good players, which are established players and brands which are more stronger, getting into more deeper into the market, or like tier 2 and 3? So you see the roadmap. Will this pandemic help you to build that roadmap faster? I'm presuming capital is available, markets are back, consumption is back. So that's obviously given that. But do you think that now this will aid for brands like yourself to enter newer cities? Do you see yourself in all the tier 2, 3 cities this year or next year?
So, Pankaj, we've been very enthused with the demand for especially social, right? In tier 2 markets and even tier 3. So even in Bombay, there are locations which are not like, so if you look at your A+++ locations, as we discussed this, Pankaj, was if you look at Bombay, there's Kolaba, there's Lower Parel, there's Bandra, there's Juhu. But even within Bombay, you have your Kandivali and you have your Vikhroli and you have your Matunga and you have your Sion, which are not really, even though they are in tier 1 cities, they're in metros, or mega metros, we wouldn't call them tier 1 locations, so to speak, right? So we are very, very enthused with the response that we've seen in markets like Thane and Vashi. Now, even Chandigarh for that matter, and tier 2 towns have done phenomenally well, even for Mocha. We've been in tier 3 cities and it's done phenomenally well. Will Smokehouse Delhi do really well in these towns? Perhaps not. But will social do well? Yes, it will. So it totally depends on the concept. The problem is a lot of us are engineering products primarily for a certain audience, right? Which tends to be the typical audience in a mega metro. But you have to really engineer your product that will fit into a tier 2 and a tier 3. So will all restaurants do well in tier 2 and tier 3? The answer is no. Will some do really, really well? The answer is yes.
And that brings me to Ashish, to you. Apart from the QSR chains who've kind of solved the F&B business for India, and they've kind of united the India market, particularly with the eating habits. So McDonald's and the Burger Kings are as popular in tier 2 and tier 3. But there has not been a single strong chain of F&B which has come out, which is a nationalized unified player per se. Why is that? Is that because of our eating habits and social preferences? Sorry, as you want to go first? Absolutely.
No, I was just raising my hand. I am.
Yeah, you are. I'm saying, but and you're right. But you talked about social, which is a bar as well. But I'm saying, apart from that, and also I would say still a lot of India is still not very much covered. So I'm saying, do you see a social coming up in Kanpur very soon? And do you think, and the same social will be in Cuttack as well? Do you think will that be a can that be a pan India?
When we were manufacturing this, we were making this product, we were thinking this product through. We wanted a product that will work in Kolaba as well as a Kurla, right? And that for us is really a kind of a microcosm for all of India. And we definitely feel that social would do really, really well even in a Kolhapur or in a Raigad or a Bilaspur. It will definitely do well for us. And yeah, there are lots of brands which have done that. I mean, you look at brands like Barbecue Nation. They've really been able to crack the model as well. They are in a lot of different stores. So it's not just the QSR, but there are a lot of homegrown brands. And I ultimately feel the ultimate victory will be more towards ethnic brands and not just QSR, because we like our flavors, and McDonald's and KFC, and we come while they're aspirational, they really don't cater to some basic Indian requirements, which is flavor, spice, freshness, with community eating, sharing, family style. So there are lots of other tick boxes. So you will see a lot of F&B brands emerging, which will actually take over the entire nation scale.
I think Pankaj, we a couple of years back, I had launched a brand called Yo China. This might have been the perfect time to get it back, because this
Absolutely.
is really. I agree with Riaz. I think homegrown brands understand the market better because of flavors as well as what calculates a value equation. Value is not just price. Value is a basket, where in India portion size and a bunch of things matter. And I think those Indian brands within, especially within the Chinese, North Indian, South Indian segment, will really, really grow because there are some basic responsibilities now that are common. Supply chain has been solved, and you have quality developers who are in many parts of India. So I think it will grow. It's a question of time.
Great.
So,
You know,
Pankaj,
yeah.
I want to also give a different view to this. First of all, Jubilant, Jubilant Food Works, it has actually, by creating Ekdam Biryani, Dunkin' Donuts, Domino's Pizza, it already had, and it has now Hong's Kitchen. It's going that route that you're talking about. That's their vision. And if you look at them, they have got 1,300 plans of 1,300 Domino's pizzas across the country. Once they create that kind of a spread, they will truly be the company which will go into every Mufassil town. The other thing that I'd like to say is that in this whole pandemic, biryani has appeared to be the star product of choice when it comes to desi product, which is wholesome, value, and well accepted by all. You talk to any food journalist or any entrepreneur, cloud kitchen, biryani has been the star. So I think there will be a few things that will change as we go, but one or two companies are set to emerge as the Sam Walton of India. Clearly, that the story is there.
Yeah. And you never know, but it could be one of Riaz, Mohit, or
Yeah.
Ashish. All the three of them could be.
That's why I'm
one of the
saying.
guys.
I'm naming who's the Sam Walton, the Julies
Yeah, I'm saying
out there.
they could be in their own Sam Waltons of their country. Sorry, we're going to run out of time for the next session. They have a hospitality session for that. But I really appreciate what you all said. I'll just do a quick recap. I think, very, very interesting thoughts from both Pushpa and you, Yogeshwar, to tell us that the confidence is very much there. And the outlook is definitely looking positive. Obviously, there is cautious optimism. And you said there are new trends like particularly in home shopping, which will be a new segment in home shopping, which will affect the luxury segment particularly, but not really the other segments. Is all about experiential retail. But as what Mohit said, that it's all about omni-channel retailing today, and the penetration is equally fast in tier 2 and tier 3 as well. And the confidence about both Ashish and Riaz, that yes, there is opportunity. There will be stronger players. The customers are trusting brands which they always believed in, and it will probably take away some part of the market from unorganized players to get to. When I mean unorganized, I don't mean smaller players, but people or brands where they have trust. It could be a next door F&B retailer, but somebody with whom the customer trusts as well. So definitely what I said, what I gather from all of you as industry experts is that the positivity is definitely come back. It's very much there. And as Yogeshwar also said, there are new formats which are emerging. Nobody thought of sushi and coffee getting served together. And I was telling a colleague today, she was talking about going to a nice place for sushi. And they said, listen, you can go for sushi and coffee today. So there are new concepts which are emerging. India is changing. As Mohit has also been telling me as well, that even tier 2, tier 3, and tier 4 is the big story now in India. And they also want organized quality retail. So we see more of DLS and Selects probably putting up new malls in newer cities as well now. So really appreciate, thank you very much for all of you for your insights. Look forward to connecting soon again.
Lovely,
Thank
Pankaj.
you.
Thank you.
Thanks.
Take care.
Yes. Thank you.
Thank you, esteemed panelists, for that excellent session. Ladies and gentlemen, we will be now beginning with our final session, which is the fireside chat, which we'll be having with Mr. Patu Keswani, the CMD of Lemon Trees. The session will be moderated by Mr. Mandeep Lamba, President, HVS Anurag. The session title stands as Hindsight 2020, Looking Back to Forge Ahead. We are awaiting Mr. Keswani to join in a couple of minutes. Mr. Lamba, over to you.
Thanks, Pranay. Thank you very much. Lovely session before this. Some very, very inspiring discussions on how the F&B sector is going to emerge, and very reassuring. Great job. I think it was very, very enjoyable. So well done, Pankaj, and everyone else who was there. We'll wait for Patu to come in and look at hospitality, which obviously has been one of the big sufferers, the hotel sector and travel during the pandemic. We'll just allow Patu to log in. Hi, Patu. Oh God. You're having some issues with joining, is it? Okay, let me get somebody from there to call you. Ah, okay. Yeah, I'm hanging. Okay, all right. I still don't see you though, but I'm sure you're there. Ah, there you are. There you are. There you are. I can see you now, Patu. You're on mute though.
Can you see me?
I can see you.
Okay, good, yeah. You can have a smoke, no? We have 5 minutes, 3 minutes. So what's up otherwise?
All good, Patu. As you know, struggling. But you know, the more interesting part of the story is with you, which we shall talk about as as we go along today.
Actually, I'm not sure everything is so interesting here in our sector. And it is.
It is not. It certainly is not. And I think that's really what we should talk about on the reality of what's going on, because I tend to think that a lot of people. By the way, we are live, Patu. I've lost you.
Me? Hello?
Yeah, you're back now.
Hello?
We lost you and we are live, Patu, now.
Okay. So we can start whenever you like. Yep.
Yeah, we can start. So great to catch up with you, Patu, as always. You know, one of the things I keep telling a lot of people is that every, you know, once in a month or once in 2 months, I love to catch up with you because you have such a great perspective. You know, it's always a pleasure to catch up with you, Patu. You have such a wonderful perspective on the industry, and you always have a take which is very different from a lot of takes that I keep hearing. So I enjoy my sessions with you tremendously, and you're probably aware of that. So here's a great opportunity to sort of share your perspective with a larger audience. So let's start with a simple thing that you know, we are all aware of the pandemic, and you know that we've been devastated with this the sector specifically. But just to do a quick overview, Patu, on where we were in, let's say, March, April 2020, and where are you right now in almost the middle of February, about 8-10 months down, almost 10 months, 11 months down. Have things changed a little from where we were, and where exactly is your outlook at this moment in time?
So if you look at, see, March was both good and bad because, you know, as you know, the pandemic impact hit us really mid-March. So if I look at the 2.5 months before, say, mid-March, I won't talk specifically about Lemon Tree. I can just say we were doing phenomenally well. Then I'll talk about India. India was doing about, I would reckon, you know, it's the best quarter. So it was doing about, we have 150,000 rooms. I reckon India was doing 115 to 120. That was the consumption of rooms. And because it was such high occupancies, ARRs were also high for all segments. Once this pandemic came, I know that in March, our occupancy in February was 80%. In March, it averaged out to 44. Okay, that was the impact. And it was so instant and so sudden. Now, as you know, I don't know how many people out who are outside of the hotel industry realize that when consumption comes down, prices come down. So it's a double whammy in both sides. The better you do, the higher the price. The lower the demand, the lower the price. And our sector is extremely rational. There are so many individual players in it who, because our costs are fixed, will keep dropping price in order to get some revenue. And therefore, there is a fundamental irrationality in our market, which is because it is so fragmented, it is not consolidated. So in April, I remember I spoke to one or two people and I discovered that the total demand in India was 12,000 rooms. So here's the number: 120,000 rooms 3 months before and 12,000 3 months later. Obviously, the inventory is the same, but a large amount of inventory, I think I was told up to 1 lakh rooms were temporarily shut. So basically 2/3 of the supply was off and 90% of the demand was off. Pricing was, of course, less than half of what it should have been. So what I discovered was that in April, May, June, 90% of that little business that we had was what I call COVID related. So actually what we did is segmentation. What is COVID related and what is normal business? So 90% of 10% of our occupancy, of India occupancy, was COVID related. So actually, effectively, your traditional demand had dropped by 99% or 98%. So that was the backdrop. April, May, June, equally bad, lockdowns and so on. So our revenue broadly was, see, we did a revenue in January, February of a little under 2 crores a day, 1.9, 1.8. In April, May, June, we did 44 lakhs a day, which is 25% of that revenue, which meant actually we were doing very well in occupancy because we got a lot of COVID guys.
Correct.
Next quarter, we did, I think, 50 lakhs a day, when traditionally we would have done maybe 1.5 crores. So our revenue was maybe 28-30% of an equivalent quarter 1 year ago. So from 25% revenue, we went to 35% revenue quarter comparison previous year. What I found encouraging, actually my big fear, Mandeep, was that COVID business was going to go, obviously. So the non-COVID, or what we would call traditional business, would it catch up? Or would actually performance deteriorate as COVID business came down? Fortunately, traditional business picked up, and as I'm sure you know, it was mostly retail. So for the wider audience, they should know the way at least Lemon Tree looks at business is, and we, since we are in 50 cities and we have 8,000 plus rooms, we can be a broad proxy. Not exact, but a broad proxy. So here's what I found. That Lemon Tree traditionally, 10% of its business was foreigners. That became 0. Of the other 90%, 40 out of that 90 was what we call retail, which is through online or through your call centers or direct bookings with you. Of the remaining 50, about 25, about 20 was, I will call SMEs, MSMEs, which are the small companies that don't have a national contract with you. Another 20 is the large companies who have, contracts with you across 40, 50 hotels. And the last 10 was MICE, which is meetings, incentives, weddings, and so on. So if I look at this stack, initially, of course, everything was 0. The only thing that was coming was a little bit of retail. Now what I find is retail has bounced back 100%. So that 40, which we had traditionally out of 100 rooms sold, we are today doing 44. In fact, we are doing 10% better than pre-COVID, but at very low rates because everybody has dropped prices. MSMEs, which is normally 20% of our business, is now 10, which means half has come back. Large corporates, out of the 20, 2 has come back. Meetings, incentives, conferences, out of 10, maybe 3 has come back because, of COVID restrictions and no large events. Foreigners is 0. So if you just do a quick waterfall, 44 plus 10, 54 plus, another 5, say, 60. We are at 60 now and roughly at 70% of pricing. So therefore, our revenue should be at 40% of the previous quarter broadly, of the previous equivalent quarter, not the last quarter. So from a secular trend basis, our revenue is growing nicely. My expectation is very simple. It is that first, we must have occupancy growth before price growth. So my guess is that by middle of this year, assuming vaccination goes at a higher rate than it is today, it's too little, MSME will come back fully, large corporates will come back at least 50%, and From October onwards, I estimate that meetings incentives will also be back full. Foreigners might take another year and a half, because it depends on global vaccination and, travel bubbles and so on. I don't know about that, but I would reckon that 90% of our traditional business, which is excluding foreigners, should be back in another 7 to 8 months. That's point one. When will pricing come? Pricing will come 6 months after that, because you have to see a sustained recovery and no jhatkas in between. What else do I see happening? I see on a permanent basis of the large corporates, which is roughly 20% of our business, 1/4 of it perhaps disappearing for good, because of work from home or more Zoom meetings, less travel maybe. So 5% of overall demand will be destroyed on a permanent basis, but supply, I reckon, will be 15%. You are in the best position. You should tell me and all of us, what do you think will happen to supply? Because NPAs will start from the end of March. So there will be people probably selling out, repurposing, shutting down, converting, I don't know. But there will certainly be some level of supply disruption, of which a large part may be permanent. Third point I would make is, broadly pre-COVID, we were growing in branded room demand, and you know this very well. We were growing at about 11% a year, secular. Supply was growing at 14, 15, 16. That's why, for 10 years, the industry was facing this demand-supply imbalance. The good news is, I reckon now supply will be completely constrained, other than those projects that were nearly complete before COVID. Demand, that 11% will come back from next year. So if I again do a waterfall of demand, 5% permanent reduction, 10% due to foreigners. So end of this year, we should be at 85% of pre-COVID demand. Next year, with 10% and 10%, 10% growth, 10%, we should exceed pre-COVID demand. So I'm an optimist. Broad guess, I think the financial year 23 will see sustained price and occupancy recovery. And 24, 25 will be golden years, because no supply will come. So broadly, this year, coming year, we will catch up to 85%. On revenue terms, I would reckon 70%, because there will be a price impact. Next year, full pre-COVID, maybe a little better. Financial year 24 and 25, I think the surviving chains, they will have massive margin expansion.
So great summary, Patu. It couldn't have been better. We did a report, I think sometime in June or July, on how we thought that this would play out. And what we are seeing largely is in line with what you're also concurring, is that we felt that occupancy in its entirety at pre-COVID levels will come back in 22, and rates will come back pre-COVID levels in 23, is really what we felt. And
but
you're absolutely
you
right.
have been a hotelier and you've run a chain.
Right.
If there is confidence in demand recovery, I don't think it'll take 1 year for rates to come back. Because keep in mind, how much is your contracted rate business? 30%?
Right. Correct.
70 is more dynamic or more short term. That will come back instantly. In fact, with a vengeance.
Correct. So I think the challenge, the challenge, I think, Patu, is more in the international travelers, which are for the luxury market, where they are dependent almost 40 to 50% on that market. That is where the challenge is going to be, and it will be difficult to fill the luxury demand through domestic demand.
I'm not very sure. That's a function of pricing. Today, as you know, luxury players are pricing at mid-segment pricing.
Correct.
Mid-segment has gone to economy pricing.
Correct.
And the independent small hotelier has got massacred, unfortunately.
Sadly.
Right. So my guess is pricing may come back a little earlier, even if we are conservative. Now the question is, will it come back end of this year? Maybe. Who knows? Certain micro markets, I'm sure, will come back.
No, they will. Where micro markets where the demand is growing, they have to come back. And I think clearly, Patu, like you said, this time the disruption is more an issue of demand and less an issue of supply. We're not going to see too much supply coming into the market in a hurry. And that is where I see a very significant rebound for the industry, and of course for the larger chains which managed to survive this. Of course, there's going to be some collateral damage for sure as we go forward, and I think there will be some consolidation of some buying and mergers and acquisitions, etc. will happen. But clearly, this is not a supply problem as we've seen earlier. Where the larger issue was supply, and we had such a large influx of supply coming in that demand just couldn't catch up. This time around, that's not the issue. So thankfully, the industry should recover a lot quicker than it has in sort of past disruptions. Very interesting, what you're saying and the confidence that you're bringing. That I think not to in any way undermine the sort of severe pain that the sector, including I'm sure your own company, has gone through. But I think we're all looking at the silver lining of it bouncing back. One of the things, Patu, that I wanted to ask you in your experience with dealing with this is, what do you think are going to be some of the temporary changes, and what do you think are going to be some of the absolute permanent changes, both in terms of business and product as well? Like you mentioned, that you see that permanently some bit of corporate business will definitely shrink. Do you see some other trends that are likely to happen as a result of this disruption that has taken place?
So, see, like some demand destruction is permanent, some is short term. There will be similar events in, say, the cost side. So one is revenue side, one is cost side. So what I find interesting is, very quickly, is that we reckon that, see, if I look at last year, our net EBITDA was 30% and our revenue was 100, expenses 70. Now, let's talk about today. There has been an enormous compression in our expenditure, reduction. I look at costs from three perspectives. One is cutting of flab, where the curse of success is that you take your eye off that. So that flab is gone. Second is deferring of costs. So like renovation, we normally renovate 1/6 of our inventory every year. So we have a 6-year cycle to refresh. This year in this financial year, we deferred that. My broad perspective, Mandeep, was let's treat this as a gap year. In this year, it's as if nothing happened, but a lot of money went from your balance sheet because you had to keep your business. Excuse me. You had to keep your business running. So there was a loss of muscle in the balance sheet. So what you needed to ensure was there was enough liquidity to meet your minimum expenses. Sorry. And pay all the staff and so on. Because this is the year that you should not do any firing. Because this is the, if your staff have any need, it wasn't this year.
Correct.
And so if you are a company that wants to stick to its brand and core values, the last thing you should do is lay off people. So we said we won't lay off anybody. In fact, we said we will pay even our small vendors earlier than normal, because they will also otherwise get destroyed, because it's the small guy who gets killed. So basically, when we looked at costs, we looked at it in three levels. One is permanent reduction, which I discussed, was flab and manpower efficiencies. Interestingly, our staff to room ratio, which was 1, we now reckon going forward will drop to 0.75. So it's an enormous saving. Power and fuel. We found there were, little tinkering that we did with the chill water temperature for air conditioning, hot water boiler timings, pressure of water through our pumps. And we found we could permanently reduce about 10% of our power expenses. Plus, we decided to go green. So last year, 5% of our total consumption of energy was renewable. This year, it will be 32%. So we really actually used this opportunity to do a lot of stuff we wanted to. All put together, we reckon there'll be a 20% savings in our power and fuel expenses and another 20% in our staff expenses, which you can imagine is enormous. In and of itself, it is 7% of our revenue, which will translate now to EBITDA. Then there is deferment of costs, which we've done. And last is cutting of muscle. So cutting of muscle, I think all hotels have done. They have deliberately opted to remove amenities, perhaps raise temperatures of air conditioning, because the question was cutting your, your suit, your cloth to get a suit out of it. That will all is coming back. So we have said, you can turn a Nelson's eye to those small complaints, which normally we don't. But those improvements in quality are already back in our system. So permanent cost savings, I reckon, for us will be about a minimum 7 going up to 10% of our revenue. So if normally my EBITDA was 32%, then on the same revenue basis, it will become 42 now.
So that's, I think, the one absolute brilliant silver lining that this pandemic has brought to everyone that I speak to, all the hotel companies and owners. Everybody is sort of speaking the same language, Patu. It may be marginally different in terms of percentages, but definitely the industry's average sort of profitability is going to go up significantly post this pandemic. I think that seems to be the one very, very significant corollary which is coming out of here. We spoke about costs, the operating costs. Patu, do you think that there will be some rethink on the way we build hotels in the future? Are you seeing some changes in terms of front desk and all the people that we employ and other sort of services? Are you looking at any?
No, I'm not seeing that, Mandeep. What I am seeing is there will be certainly some permanent improvements in hygiene. In all our SOPs, we will put health and safety as a #1 priority in our core values, as an example. Okay, so these will happen, but I reckon based on what's happened in the past century, in the last 4 or 5 pandemics and epidemics, everything came back to normal in 3 years. It's human nature, to socialize, to travel, to interact. So masks and sanitizers and, contactless and all that, a lot of it, most of it will go out of the window. What I do see happening is a movement towards digitalization of operations. Contactless from a, not so much a hygiene, but from a learnings perspective that, look, it can save manpower costs.
Correct.
But there is a trade-off between that and the warmth of human service delivery. So we've done a bit of it. I reckon we'll continue it. So we will now look at digitalization, which is, whether it's customer outreach or operational efficiency, with a lot more interest. We have set up an internal team, a core team to evaluate, AI, machine learning, robotics. What can we do as a company in the next 2 years? So there will be some changes. But let me put it this way, there will be always a trade-off between efficiency and human delivery. And Indians want human delivery. I also predict that the large 5-star chains who were used to serving mostly foreigners, or a large number, will focus a lot more now from a risk mitigation perspective on domestic. Which means I see a growth in demand among domestic travelers across segments, because as you know, the more attention the supply side pays to the demand side, in fact, the better the demand does. So that's the good news I see.
Correct. Tell me something, Patu. We are grossly, as we've realized, and we've known this for a while, but almost everybody wanted to focus their attention on the key corporate cities, commercial cities. Do you think that we will see a significant increase in our leisure inventory, which is fairly underserved? Is that a trend that we're likely to see?
Definitely, and in tier 2, tier 3. Because let me share something amusing with you. Since we started managing hotels a few years ago, we now have 40 hotels in our managed inventory. And many of them, and most of them are not in the tier 1s or metros where we have owned inventory. I'm amazed at their performance. Because they have traditionally not been eyed by branded chains. They have a lot of, so all the branded chains are heavily concentrated in metros and the large tier 1s. In the tier 2, tier 3, there are these smaller hotels / chains. Their ARRs are better than ours here.
Yeah.
Okay, because there's no competition. They are, I don't know about the efficiency and the service levels and so on, But certainly the ARRs are very interesting. And the hotels we manage, many of them, the ARRs are unbelievable.
Yeah, that's
so
true.
What I'm saying is that our next thrust is to get there. And I think, or I would say any chain that is evaluating it, there's no doubt, go there.
So a pointed question from this that would you be keen to acquire something which has a portfolio and is interesting in terms of what you just spoke in leisure?
See, my big problem, Mandeep, is that as owner, we own the largest inventory of hotels and rooms outside the Taj. I mean, we own over 5,000 rooms. We are building another nearly 1,000 rooms. So there is a limit to asset ownership because that is actually the low end side of the business in terms of return.
Right.
So our intent is actually to sell assets and recycle the cash into higher ROCE businesses.
Right.
My other problem is, unlike the other hotel chains, all our inventory is new. So you take the book value of a traditional hotel chain and the hotel is 30 years old and compare that same hotel with a new hotel I put up 2 years ago. My book value is twice or thrice a 5-star.
Correct.
So my return on capital is also therefore that much lower. So what's my view? My view is we are open to acquisitions which are fundamentally capitalized, or we will talk to some funds which have been discussing with us and use them as the funders, but we will be asset light. So we are very open to acquisition, but the acquisition must be without cash. No room.
You've been there, done that, which leads me to my next question, actually, Patu. You've been an entrepreneur in this sector now for almost 20 years, and there's been a huge learning. You've been through a huge learning curve setting up one of the country's youngest and perhaps one of its best performing, businesses in the hospitality sector, at least in terms of the mid-scale. You've raised capital through, early angel investors and then private equity, and then you've done your capital raise through the capital markets. What, in your view, having been there, done that, is the sector can do to make this business a lot sexier than what it is, considering that it still sits at the bottom of the real estate asset class when it comes to institutional investors looking at investing, despite the fact that India is grossly undersupplied and we have fabulous potential. Are there some thoughts around this on what the industry or the sector needs to do?
See, I reviewed this actually from a demand side. So here's the deal, Mandeep. We are very early in the hotel demand cycle. If you look at India, it has two parts. One is agricultural, where half the population resides, but 1/7 our GDP. Then the other half of India, which is, well, 2/3 of which is urban, where the services manufacturing sector, self-employed sectors reside, where it's 85% of India's GDP. These guys are the targets to consume hotel rooms. But if you further segment that, then really only 10% of India, 130 million people, 35 million households, are actual consumers of branded hotel rooms. Otherwise, they all go and stay in those chota guest houses at 800 bucks. When will that change? So really, when we talk of penetration, we are 10% anyway in even the real economy. So in that sense, we don't have lesser hotel rooms. We have lesser demand in the population side. So it's a demand issue, not a supply issue.
The per capita issue.
Correct. So they're only 10% of the guys over $3,500 per capita. Yeah. They are the guys who can buy hotels. I mean, hotels like mine. So my point is that when the GDP doubles in India, typically this segment grows 6x.
Okay.
So it will take another 5-7 years when demand will shoot through the roof, as happened in China at an inflection point of $4,000 per capita country.
Right.
We are at 2,000. So we are not underpenetrated, in my opinion. The real problem in India is that because a lot of black money went into building of hotels, the earlier hotels, which were individually owned, they were irrational investors, irrational pricing. I feel that hotel management companies have done a disservice to Indian owners by not focusing on ROCE. They don't look at return on capital employed, they look at EBITDA. So there is a lack of alignment, a perversion of incentives, in my opinion. Until owners drive that, there will be no price change. Until there is no price change, the markets will not reward our sector. Take me, for example. My real problem is that the investment I make per room and the revenue I get per room, there is still a disconnect. Because the Indian customer doesn't want to pay.
Correct.
So that's the issue.
Right. It's an interesting take on what you say, and I tend to agree that it is the issue of the GDP of the country reaching that level where you'll suddenly start the inflection of demand. That's a very, very valid point. I think we're coming to a close of our time. I have two very quick questions for you before we end. One is, Patu, on the revenue sides, we're seeing a lot of the ancillary revenues sort of focus from hotels. Do you think this will go beyond the F&B extension, and is this going to become a reasonably significant focus permanently going forward?
See, I know that from what little I know, personally, Taj ka cumin I tried. It's a fabulous, I mean, I'm hats off to them. Now, will demand for that continue when things open out? I don't know how much takeout demand will continue. I don't think people will want to sit at home and order takeaway. That is an artificial demand buildup. So while it may continue, it should be at much lower levels. And people, if they want to eat, will go to the Taj and sit in the hotel and eat rather than order the food from there. So that's point one. But broadly, I reckon that F&B, high value, quality F&B outside of the hotel, delivery of that will be a significant revenue generator for some hotel chains. Not for us. We are not focused on that anyway. So we haven't done any of it. But maybe for the Taj, perhaps even for the Oberoi and ITC, I don't know the numbers, but it'll be, I reckon, a part of their business model going forward.
Interesting. Lastly, Patu, if I was to just ask you on what are your, couple of key learnings from the pandemic, and if given that if you were to face a similar disruption in the future, what would you look to? How would you look to deal with that from the learnings of this pandemic?
See, I'm the highest growth asset company in India. So I am in capex mode. So I have a lot of debt which just got operationalized. So one learning I have is that I will strategically look to reduce debt from our balance sheet to 0 in 5 years. I'm very clear. We have got 75 crores of debt. It has to be 0.
Fabulous.
Number 2 is I will always keep enough cash on my books. And yes, people may complain that, listen, if you have, let's take a number, 200 crores of cash on your books, and you're earning 4% liquid or 3%, you're not rewarding, you're not maximizing return, but I'll say it's actually a risk mitigation strategy. So I don't look at it from a return perspective. I look at it from a risk return trade-off for the whole company. So I would build a sufficient liquidity cushion. I would write down all my debt as quickly as I can. I would also look at recycling cash because of the large number of assets we own. And I think the last is that I would revisit my risk management framework. So we have a very complicated document, a risk management framework. Unfortunately, a pandemic, we have very little control over. But now I will increase the likelihood of such an event and then track it against impact. So in our risk management framework is likelihood versus impact, speed, and our mitigatability. So mitigatability, as I said, is remove debt, keep cash. Speed, it's instant. That's what we've seen. Likelihood, which used to be very low, now I will put in the medium category. And impact, I will put as extreme. So when you look at the framework from that perspective, your entire response becomes fundamentally a little different. So that's what we will do.
Amazing, Patu. Looking at writing your debt down to 0, it's an amazing, thought. And I think you're largely going to do it by monetizing some of the assets that you own, I presume. And you're going to become a reasonably asset-light sort of company going forward, learning from what's happened from the pandemic, that debt can cause the sort of most significant damage to you when you're in the growth mode. Great speaking with you as always, Patu. It's always a pleasure. There's so much to learn. I wish we could continue, but we've sort of actually exceeded some of the time that was allocated to us. Stay well, Patu. All the very best. And I'm sure we'll get an opportunity to speak to you again.
Yep. Take care.
Bye for now.
Thanks. Bye.
Thank you, Mr. Keswani and Mr. Lamba, for that excellent session. Ladies and gentlemen, with that, the day one for the third CII Real Estate Confluence comes to an end. May I invite you all for the second day, which is tomorrow, Thursday, 18th of February. We have some exciting panel discussions tomorrow. To begin with, a panel discussion on India investment view for the lens of global investors, followed by a session on digital adoption, indispensable for real estate sales and marketing. With this, we move on to a fireside chat on pause, shift, rebound, the co-working space, and a fireside chat on technical innovations 2021 and beyond. And finally, the most awaited roundtable on is Gen Z ready to take on the world, where we look at what the future holds for the real estate sector. With this, ladies and gentlemen, I would request you to kindly join tomorrow again at the same time at 1400 hours or 2 p.m. The link is from the CII Hive platform. And before I close, I would like to once again thank our partners today, Anarok, the Knowledge Partners, the Lodha Group, the Gold Partners, and the Silver Partners, the Vaswani Group. Thank you, everyone. And with that, we close the first day for the third Real Estate Conference.